000. I'm here with Gino.
Hey, danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player. Feeling like Pac, represent. On my block, try to knock me down, but I come up on top. Yeah, they wanna see me flop. Got a plot, want a lot, I won't stop on my pops. Got so many flows, it's insane. They don't really understand the game. Got a plan and it's plain, I ain't playing. I'm just trying to gain. I wanna get that big bag, need that big racks. Blow up Tic Tac, where the blue cheese at? I don't give a fuck about your feedback. Eat that, get back, sit back, watch me spit that kickback. Got so many flows, yeah, they think that I'm insane. Ghetto kids in a lot of pain, all about the bills, ain't shit changed. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game, I'm a player. If you a hater, I don't hate you. I'm just really happy that I ain't you. I just wanna thank you. You kept me motivated, so now I motivate you. There's a lot of cake, money on my mind like a banker. Coming through with them bangers, ain't no room for mistakes. Lot of stake, hustle till we get a lot of rooms, lot of stakes. Good kid, but I keep it gangsta. All gas, no brakes. Got cash for the case. More cash in the case. More cash in the safe. More cash on the way. Hustling all day. Ay. Danger, coming with them bangers. Tell me where my paper. Still on the same mission, trying to live major. Don't hate me, hate the game. I'm a player.
Danger, coming with them bangers. Where my fucking paper.
Said I'm taking big shots, just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. They been trying to get me cheap like a thrift shop, but I told them it's my time, check the wristwatch. They been talking way before they even doing something. Whoa. If they wanna play, let's get a tip off. Ain't no silver lining, dawg, this some rose gold. Getting new money, I'm a old soul. Yeah, I get it bouncing like a pogo. Whoa. And I'm too cold like Frozone. And my chick elastic, girl. Told them we ain't in the faking, this ain't plastic, girl. Bought a new whip and cash, now my taxi thorough. Way I'm shooting like step with my passes, bro. The way I'm playing the field, I'm in a league of my own. And now they all in they fields, I got them all on my phone. But dog, I'm hitting the climb, I got no time on the low. Way I'm shooting is messy, the way I'm hitting the goals. I'm taking big shots, just stop. Way I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. I just left, but you know I'm coming back though. Whoa. And you know I don't play by my rags though. Now go and turn it up to the max, whoa. Send a paper to me now like a fax, whoa. Yeah. Got 2 phones ringing off the hook now. When I'm in the city, I get looks now. I was going bad, but I'm good now. Said I had to go and put my foot down. Told them I'ma get it and go. Nah. Even in the summer, man, they knowing I'm cold. I got a couple checks coming that I made out the flows. Might get a couple more popping if I do it some more. I gotta do it for real. Said I'm back in my bag. All my digits are climbing just like they all on a dash. And they tell me slow down cause dog I'm moving too fast. Might go and caught me a Tesla cause dog I still got a gas. Said I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots. Just stop where I'm driven, no pit stops. This hot, I ain't playing like a 6 spot. Pissed off, thought I told him this a chip shot. I ain't missing cause you know I'm taking big shots.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go. Yeah, we winning by a landslide. Never see me coming on my landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on the road, here we go, yeah. At the top of the class on a roll, ayy, and it's time to run it up, yeah you know, yeah. Maxed out, put the pedal to the floor, yeah. On the road, here we go, here we go. Here we go. On the road, here we go, here we go.
What is going on, everybody? Welcome back to the Frankie Candles live stream, and we're back with another FOMC live stream. Bitcoin getting the dump down to our key level that we looked at yesterday, guys. And if you tuned into yesterday's live stream, you will know we were looking at a very specific money flow crossover to start that move down. And sure enough, that money flow crossed red, and Bitcoin took the dump ski, and we are now sitting at our key level of support. So we're going to talk about all the major levels. We're going to watch, we'll stream Powell. Hopefully we don't fall asleep. Actually got a package today, so maybe I'll open that while he's giving us a snooze fest. But yeah, we're going to live stream the meeting. We got Tony D in the chat. We got Jesse in the chat. What is going on? I want to talk about kind of what I'm expecting next here. Can we still continue up? Obviously, we are expecting hopefully some volatility here on FOMC. I feel like recently they've been nothing burgers, but hopefully, we'll get some volatility here. Maybe we'll pull up that 1 second time frame, and we'll try to call these moves. So shout out to Jesse in the chat. We got Tony D. We got, we got JQ said the bottom is in. Hey, shout out to JQ. That would be nice, right? That'd be the easiest bear market ever. But yeah, maybe we'll talk about that a little bit as well. We talked a little bit about that yesterday. Not that the bottom is in, but kind of what I'm going to be looking for, why I'm saying hashtag 2026 bottom watch, and kind of went through exactly what I'm looking for. But yeah, shout out to Fiat Level. What is going on? Said Mafia. Welcome in, Fiat. Welcome in. We got Passerby. What is going on? We got Jay in the chat. Said I'm in the chat. What is going on, Jay? What are you guys thinking? We're going to get, Bing Bong price action time. Yeah, shout out to Jeff. What are you guys thinking? We're going to get some, I don't know. Guys, we kind of just have fun on these live streams. Obviously, I'll give you guys like a market update, what I'm looking at, and then we'll pull up the stream. I kind of just, I'm not going to lie, I kind of just, F off during the speech and just sit here and let him talk. And then we watch the chart. We try to call the moves, but it is going to be funny. The plastic doll, shout out to Servanda. Is it a new Mrs. Candles? Guys, I do have some mail here. What do you think? What do you think? I'm not going to show the label, obviously, but what do you think? What is in here? Is it a new Mrs. Candles? It seems a little small for Mrs. Candles. Maybe a little light for Mrs. Candles. I don't know. I think I know what it is. It's not super exciting. It's exciting for me. I don't know if it's going to be exciting for the Mafia, though. But anyway, Let's go ahead and see. I hate FOMC days. Yeah, guys, if you're a new trader out there, or I don't know, even if you're not a new trader, guys, I typically kind of let price action do its thing on FOMC. I'm still holding my shorts from much higher, $98,000, $90,000, and I am still holding the long here from about 65, 572. So I'll break down exactly what we're looking at. Obviously, we are at the key level we looked at yesterday. I'll kind of just give you guys an update on that. And, yeah, we'll see what happens, and we'll let the chaos ensue. But without further ado, guys, let's go ahead and jump on into the charts. Let's get into it. 4-hour stream incoming. 4-hour stream. I feel like we usually do go a little bit long on FOMC days. We're 10 minutes and 25 seconds in so far. So we'll see what happens. I don't know. I'm probably going to lose. Shout out to King Wasabi, bro. King Wasabi says there's a flashlight in there. I already have a flashlight. I have a bunch of flashlights. They're all different sizes and shapes. They're really bright too. But yeah, I don't know why. I didn't need a flashlight. I definitely didn't order a flashlight. So if there's a flashlight in there, I don't know. Somebody sent it to me. But anyway, batteries. Shout out to Jay. Is it new batteries for the mouse here? We're on day 2 of this battery, so it'll probably go dead during the stream. But guys, here we are on the Bitcoin chart, and as you can see, Bitcoin getting the dumpski to the downside. And hey, shout out to anybody who was watching the live stream yesterday. You guys will know we were looking for a potential failed auction up at these levels between about $75,000 and $76,000, and specifically on last night's live stream, we were talking about the 12-hour and the 16-hour red dot coming in, right? Looking to print. These VWAPs are coming down. The red dots were flashing 12-hour, 16-hour. And when we see those red dots printing, we go down to the 45-minute and the 1 hour, the 1/16th of those time frames. And when we see those money flow crossovers on the 1/16th time frames, literally, I think my exact words were, to start that move down, I will be looking at that 45-minute money flow crossover. There's that 45-minute money. Whoops. There's that 45-minute money flow crossover. There's your loss of the support, right? And the support that we were looking at was obviously the anchored VWAP as well as these 2 previous highs, right? We were trying to hold above it. And I actually did take a short yesterday. Was a little premature on it, right? But I did take a short there. I don't remember if it was here or here. But for the, or maybe it was here on the way down. But looking to take that failed auction setup, I ended up getting stopped out. I took a more aggressive entry with a tighter stop loss. And the reason for that was because I wanted to take a bigger position size. I did not want to have my stop loss all the way above the high, right? Because then I would have a bigger stop loss. I would have to lower that position size. So I chose to make to have a tighter stop loss above the previous highs, so I could take a bigger position size. Obviously, a higher chance of getting stopped out. I ended up getting stopped out there. But the obviously the idea of the failed auction setup was still valid. We had the setup here from the 1 hour bearish divergence in the premium Discord, in which case your stop loss could be above the high. And even if you do take it on the loss of support here, right, you can always keep your stop loss above the previous high. And of course, in that case, right, I would be looking, I would want some kind of an eventual target down here towards the value area low. Is this where we're headed? We're going to talk about it today. But of course, we did end up, for the failed auctions, guys, it's kind of like an elongated SFP. You guys know the SFPs is a wick above the level, candle closure down below. But the failed auctions kind of, you try to trade above those levels. You kind of wiggle around, but eventually you lose that support and you get the bigger drop down. I even pulled up the post in the Discord of exactly what we were looking at, and actually pull it up here, right? We talked about this yesterday. I pulled it up, looking for that 1 hour bearish divergence, right? If we, this was after we got the bear div, but once you get the bearish divergence, right, you're looking to eventually lose that support and then see that failed auction play out down to that major key level that we looked at yesterday, sitting at around about $70,500, and of course, ended up getting that almost like perfect. Bitcoin following the magic line, as we say in the Discord. But yeah, beautiful move. And now we're sitting here at that key support. This was obviously kind of the thing that I was looking at as like, this would be really nice if you're not holding long positions. I am not telling you to long Bitcoin right now, obviously, but if we were going to get a pullback, this was going to be the biggest and most important level of support, guys. And it still remains so, right? If we're able to hold inside this support zone and get a higher low to come in, this would keep the idea open of a continuation of the uptrend. Obviously, we've talked about the market structure changing here. We have lows, we have highs, we have higher lows, we have higher highs, and we also have the higher time frame money flow. And I know I just talked about the red dots on these time frames, like the 12 and the 16 hour, but of course, the red dots indicate ebbs, flows, ebbs, flows, ebbs, flows, ebbs, flows. Money flow indicates the overall trend, right? So when we see this money flow coming up, it does give us the possibility to be looking for potential higher lows and potential higher highs for the continuation of the uptrend, assuming that this money flow stays in the green. So I am still open to that here, and I'll go down to the lower time frames as well. But here we are. We look for the pullback into the key support. We got it. And I even said yesterday, like, this would almost be a little bit too nice. Like, sometimes the max pain scenario is just to keep squeezing to the upside and have everyone not sitting in longs kind of feel like they missed out. But Bitcoin decided to come down and push into that support. So very nice. Now, if, right, this is obviously major, major support. On the way down, right, I compared this to the move right here. We took this short when we got it, right, and we wrote it down. We had the value area high as our major key level of support, and then that next major key level was obviously the value area low. That is where I'm holding the long position. I am still currently holding that long position right now. But same thing here, right? Looking for the failed auction. It was the same setup here as well, right? We had the resistance levels here. We looked for the failed auction. We end up getting it. And it's going to be kind of the same thing here, right? First major key level of support is right here. If we end up losing this, there is a little bit of a difference here. If we end up losing this, right, I talked about how yesterday we do not want to get accepted back into the value down here. If we want to see a breakout, guys, we don't want to spend a lot of time underneath this value area high, because if we get accepted into this value, of course, you know, it is starting to look like a deviation above the high, acceptance into the range, and then a potential another full fill of this volume profile. Excuse me, and the next biggest level of support that I will be looking at within the profile is obviously going to be the value area low, sitting at about $66,049. And then we also have the 786 Fibonacci retracement sitting in there. I'll take this golden pocket off because we've already gotten the bounce. Right, so we have the golden pocket, the value area low, 786, sitting right here between about 66 and 65. They call it 65K. This is the most important level underneath us if we get accepted into the profile and we get the continuation down, in my opinion, right? I mean, it's an important level. If we get the confirmations down here, I may be interested in a long position, but at the end of the day, guys, I'm going to show this from a volume, visible range volume profile perspective. I'm really just going to view this as a range, right? If we can't hold here and we get accepted into the range, I'm looking at the value area low. This is the kind of last place I will be interested in long positions. The line in the sand here is going to be the daily MPOC at 63,851. So, you know, maybe we come down here, we deviate below. You got to get back into that range. But to be quite honest, the more time that goes by, the less interested I am in this level, and the less confidence I have for it to hold, right? So, like, really putting stress on this zone right here. I would really prefer not to lose this. If we lose it, I'll be looking down. Of course, you have the POC at 68K. It's an honorable mention, but really the bigger level is going to be down here. If we cannot reclaim this level, as we've talked about, even down here, once we lose this level here at 63,851, this is where I'm looking for the bigger drop down to $60,000, right? And again, just from a volume profile perspective, right? If we want the breakout of this range, we really don't want to get accepted back in here, right? And what is also confluent with this key level of support that we looked at yesterday, well, not only is it the golden pocket, 786, 3 daily MPOCs, value area high, right, for a simple range retest into the Fibonacci retracement for potential higher low and higher high, but if we take that local range off the chart and we look at our larger volume profile, you can see at the bottom of that zone is our macro value area high, right? We definitely don't want to get accepted back in here, because the idea is, from a higher time frame perspective, you have your upper value, whether you want to look at the local range or the larger range. The value area low still sits at around $86,000. Impulse out of here, price attracts, is very likely to get attracted towards that next area of value, which sits down here. We bing bong around in that range. If we're going to break out here, guys, again, we do not want to get accepted into this profile. Get below here, again, losing that key support level we just looked at, just a different perspective, right? POC is probably next, sitting at about 67K. Once you start losing that, really don't want to lose this. Once we lose this, there is nothing underneath us holding us back from taking out that $60,000 level. Until we get accepted in here and we start losing that POC and we start playing with this level, I am still going to view this as money flow coming up on the higher time frames, right? It's until proven otherwise. So money flow continues up on the 16-hour. Daily red dot is obviously printing. This is another thing we looked at yesterday for a potential pullback. But then, you know, even the 2-day money flow starting to cross green. VWAP coming down, right? So it could still cause a little bit more of a pullback. But from a money flow perspective, from a trend perspective, right, I will still be interested in higher lows and higher highs. Biggest level here, $71,600 to $70,000. Lose this, right? I'll be looking at it personally through the lens of this range, right? POC at about 68K. Once, you know, I'm just going to view this as a volume profile. Lose the value area high. POC is very likely next. If we get confirmations here, maybe I'm interested in a trade, but just from a confluence perspective, there's, you know, you have 1, 2, 3, 4, 5 levels of confluence up here. You have the POC here. You have a Fibonacci retracement in there, but again, it's not really anywhere close to the confluence you have up here. So I am just putting a little less focus on that level. And then down here, you have a little bit more confluence with the value area high, value area low, 786 daily MPOC. So the biggest levels, in my opinion, right? Honorable mention at the POC, but it's right here and right here, right? And then, of course, this is not only the last level, it's very important because if we lose it, that's where we see, in my opinion, the drop below 60K, right? And then that would be, I was talking to the Premium Discord earlier today, kind of saying, when I look at this, right, and if we do come down here and we end up looking for long positions, it's going to be a bit difficult, right? Because even if we wind up reclaiming, I have to look at if I'm trying to front run these confirmations, if we get the drop down to the value area low, this 2-day red dot is already looking to print somewhat soon. If we get down here and this 2-day red dot is printing, I don't really like to long against a fresh 2-day red dot, right? And one of the things that we've been looking at here on the higher time frames is if we lose this key support at 65K and we come down and take out the low, it could set us up for nice high time frame bullish divergences. This is the preferred scenario in the long term for me. Whether we come down from here, we come up first, and then we go down. I would really like to see high time frame bull divs here. I explained this all on yesterday's live stream in depth. I would recommend rewatching that if you have not seen it. It's not needed. We don't need to have that happen, but it would be very nice to see these high time frame confirmations because then we could actually say, all right, now we have high time frame bullish divergences, money flow coming up. It starts to look like a really nice bottom. So again, until we get down here and start losing this level, my context here is, high hourly time frame coming up, 2-day money flow trying to come up. We can look for the higher lows and higher highs, but in a bear market scenario, you do just kind of have to keep in mind that bearish case, right? And again, we do have that clear line in the sand. Lose this, that's where I'll be looking for those high time frame bullish divergences. And I will be very interested in longs down there. We also have massive, wow, did not mean to draw that so accurately, but we do have the massive weekly MPOC. We have a monthly MPOC. We also have a weekly down there. So, if we do end up taking out this low, we do have massive support down here. It's also our 2021 value area high, right? So massive support down here. If we do take out that low, we got a floor underneath us, right? It's not like we're just going to fall into a void of nothingness. But yeah, until then, right, I'm just going to view this from a volume profile perspective. Of course, as I just mentioned at the beginning of the stream, I am not currently holding the short position. But if I were, right, I'd be looking at this as a take profit 1, get accepted back into the range. POC is the next target, lose the POC, value area low is the next target, options for take profits here, and then at that point, you can look to potentially hold that short with your stop loss at break even, whether your entry's up here or here, right? Hold that stop loss at break even, and then have profits locked in, guaranteed winning trade. If it decides to melt down below 60K, well, guess what? You're short from the local top. So yeah, we'll see what happens. Maybe we get some interesting price action here for FOMC. Currently holding, at least attempting to hold here, coming up to retest this anchored VWAP on the lower time frames here. But, looking at market cipher B, right, we do have the 4-hour VWAP, pretty deep below the 0 line. But again, you do have the daily red dot, 80 and 90-minute money flow attempting to come out. This is another market cipher B bearish setup, as you guys know. I don't ever really set limit orders to enter longs, right? I want to see the confirmations within the zone of support. And right now, right, at least on the 80-minute, there's no bullish divergences. 45-minute, no bullish divergences. 15-minute, you got a little bit of a bull div there with lower lows, higher lows. It's not super pretty in my opinion. But I'd like to see maybe like at least a 30-minute bull div would be really nice, right? I'm not going to give the exact setup here, but, in my opinion, right, I'm kind of sitting on my hands here. I have not taken a new long position, but, of course, I am also just still holding my long from down here. But, yeah, we'll see. Maybe this holds. And, again, FOMC probably going to bring in some volatility here. Maybe we get another push back up. Maybe we get the rip down. We'll see what happens. We'll be covering it live, the chaos live here on the Frankie Candles YouTube channel. Let's see. When do I short? Shout out to Z Punisher. Do you think there's still a chance for 80K before dropping more? Shout out to Clash. Yeah, at this point, we're still above the major support, most of the major support here, major confluences between the golden pocket value area high, weekly MPOC, etc. But again, right, I want to see what the reaction is here. I wouldn't say this is like a major bullish reaction, at least just yet. Again, not a ton of really nice confirmation. Maybe the volatility pushes us back up, but on like a normal trading day, I would really like to see at least like a 30-minute divergence or, some kind of significant signal down here, which I'm just not personally seeing right now. 45-minute money flow, again, fresh in the red here. So, this could indicate continuation of the downtrend. Remember, downtrends have ebbs and flows, right? So, even if you get a retracement, I'll pull up some of the local levels as the price action starts to move, could continue the trend to the downside. The key here is that we do not get accepted. I'd be okay, right? Regardless of what happens up here, I'd be okay coming deeper into the zone. We just don't want to hang out underneath this value area, right? If we can't get back above this value area and we just get stuck in here, that's where you look for the acceptance into the range and a drop down towards that PLC. But we'll see. We haven't even hit the bottom of this zone. So, yeah, we'll keep an eye on it. But 45-minute money flow coming out. 1 hour money flow still just crossed over into the red. So, again, when I look at this indicates that the trend could continue to the downside. So this will be a scenario locally where I would be looking for some kind of rejections, like lackluster pumps to the upside for lower highs and lower lows. But on a higher time frame, such as the 16-hour, right, it could still look like an ebb or flow to the downside before a higher low and a higher high. It would be losing this level and getting accepted into the range that would kind of invalidate that idea. And then really the last line of defense, in my opinion, right? We could try to draw like a trend line here as well. Pull it up on the daily. I'm not a big trend line guy, but yeah, yeah, I don't know, guys. I would really prefer to hold this. We come down to the POC. Again, there's not a lot of confluence. Again, if we come down here, we'll cover it live. But yeah, like biggest levels here. Bada boom. And then above us, right, if we do get another high to come in, let's say we just hold this from here, volatility brings us above the high, right? Next major area I'll be looking at is about $78,000, right? We have the golden pocket, 2 daily MPOCs, and then this would be a key level to the upside. I don't know, right? Like recently, FOMC has been kind of like with the volatility. But if we get some kind of massive rocket ship to the upside, long will continue to play out, and then that next major target would still be to get above the anchored VWAP. Once we get above $75,000, essentially, hold above it, right? That's where you can get that bigger squeeze up towards 78 to $81,000, right, into that golden pocket. Golden pocket sits at about 80K. So big area to the upside. We're kind of sitting in the big level to the downside. If we break back in, we got the PLC and the value area low. These are the areas of interest for me. If I had to guess, right, with the luck of FOMC recently, probably do something like this, right? Come down the lower time frame, like, and then we'll probably end the stream right where we started it. I don't know. We'll see. Shout out to Zach. Thank you for the super chat, brother. I appreciate you. He said, I know you like them golden riddles. What global asset drops 22% exactly, 126 to 97 and 97 to 76 to set a lower high? Shout out to Zach. Is it cow manure futures? I think it might be cow manure futures. Shout out to Zach. Let's go. You can't be talking about Bitcoin. There's no way. Shout out to Zach. Thank you for the super chat, bro. I appreciate you. Shout out to Gen Z. Said, so weird. Okay, I will be lurking, I guess. Shout out to Gen Z. We could see you. We could see you, Gen Z. We could see you, brother. Welcome in. We got Erica in the chat. Said, I don't usually order, lol, but the spicy McVeggie with cheese is so good. Shout out to Erica. I've never had, I don't know if I've ever seen, I don't know if we have the spicy, I don't know where you're from. I've never seen a spicy McVeggie. I'm a Big Mac guy. If I go to McDonald's, I'm probably getting a Big Mac. Large Big Mac, giant fries. Nobody tell my personal trainer that. I'm joking. You can't tell my personal trainer because I don't have one. I'm my own personal trainer. But anyway, it's a Silicon throwback. Shout out to Tony D. The riddle is a throwback? The whole market will sell off huge by summer. Shout out to Visionary Pulsed. Well, if we get a huge sell-off, tell you what we'll be looking at. It's kind of a clear line in the sand here for me, right? High time frame, guys. If I just take off all the local levels, I'll get rid of that fib, right? All the key levels, like now we've built up some supports in here. But at the end of the day, I'll just take off all these levels. If we're going to get a big drop to the downside, again, right, we talk about this. 65K is kind of the last level underneath us if we're going to stay inside the range or potentially continue up. Once we lose 65K, the biggest level of support underneath from a high time frame perspective is going to be 58 to 55K. If we end up taking the low, right, again, even the higher time frames here, looking at something like the 3-day, let's just say, again, regardless of if we go up more first or if we just come down from here, we lose this. This could be a place where we could start to look for those high time frame bull divs. Is that guaranteed going to be the low? You know, not necessarily, but you do have the massive supports. You also have your 2021 value area high for the range retest. We're retesting the all-time high of the range. All right, so you definitely have massive support down there. And then once we start getting accepted back in here, guys, this is kind of where things get a little bit sketchy. And this is where, you know, I would start to entertain the much more bearish case to potentially head down towards about $37,000 to $30,000 until we end up getting down here and we get the bearish confirmations, right? And the chart looks like trash down here. This is all speculative. There's no reason for me to say until we lose this level, like, hey guys, we're definitely going down to 30K, right? We could have that. You could have that assumption, of course. But obviously, you know, there's no saying that, you know, if you bottom out here and it doesn't come, right, well, then you're going to be sitting there waiting for lower prices forever. But I would say the line in the sand there, the first line in the sand would be about $55,000 at the value area high. And then we have the very key level at $47,000 on the POC of the range. Once you start getting accepted into the value area high, the POC becomes very likely. This is absolutely key because this is the last thing you have before probably a very fast drop down towards about $37,000 to the monthly naked point of control. And then at that point, you're accepted into your value area. And of course, right, can't hold the POC, right? You would be looking for that much bigger drop down towards 30K. This would give you kind of the more traditional 4-year cycle play out. Definitely in the cards, right? But of course, right, I would not be ignoring this key support. And kind of another thing here to look at from a volume perspective would be the fact that as we always look at these low volume gaps, let me pull up the VPVR real quick. I don't know if this is going to pull on the VPVR. Yeah, I mean, you could just see. It's like lose that value area high. It'll probably look a little cleaner if I do this. Come on, volume. There we go, right? Lose that value area high right down towards that POC. You got a high volume node right underneath. Once you start losing the POC, right, you have another. I'll actually zoom out a little bit. It's a little cleaner. Right, you got a gap between the value area high and the POC. And then you have a gap below this high volume node. You have this little consolidation here, bottoming out at about $37,000 on the monthly naked point of control. And then, of course, right, if you're looking from a volume profile perspective, get stuck under the value area high. Yikes. Hold it. I mean, huge high volume node here, right? This is massive support. Coming from here, coming from here, coming from here, right? And then once you lose that high volume node, right, you got the monthly MPOC and then $30,000. If Bitcoin comes down to $30,000, guys, I will sell everything I own to buy Bitcoin. This again is not my base case. It's definitely in the cards. Can't say it's impossible. I would see this personally. I know this is going to kind of like, a lot of people are going to be like, this guy's crazy, but I would see this as a massive gift, right? If you're in the business of accumulating a bunch of Bitcoin, this would be a gigantic gift. I would love that. But again, from a situational perspective, I'm not going to ignore all this high time frame support. Once we lose it, then we can start talking about those lower levels. Shout out to Zach. Thank you for the super chat. Said, just tell us if the next lower high will come around 58 to 59K. Exact drop from 76K after we make the low, of course. I was going to say lower high at 58K. That would be a lower low. Again, you know, it would depend, right? I don't know exactly what the price action is going to look like. I know some people sometimes get confused about that, but, like, you have to understand, like, of course, we looked at the idea of the failed auction, lose your resistance, right, or lose your support, right, get the drop down into the key level. We're getting the bounce from the key level. Like, there's a chance this didn't play out too, right? So there's always going to be an opportunity of either thing. If I had to try to make, like, some kind of speculative guess here, I mean, kind of does look similar to this, right? Maybe get, like, a little kind of, you know, rising wedge type or bear flag situation that eventually breaks down for another drop. But yeah, if we came down here and then you put in the lower high, I would be, if you break into the value area, you know, it'd be easy for me to say, hey, look for the lower high here. But it all depends on the structure, right? Like, if this goes straight down and then we get a bounce here, right, I would be pulling the fib from here, right, which would give you a pretty high area to look for a lower high, similar to up here. If we get a bounce here, right, and if the structure looks different, right, if we have, like, significant market structure, right, I'd be pulling these fibs from different places. So we'll have to wait for the price action. Shout out to Zach. We try to get it as close to exact as possible, but Shout out to Zach. False. You have a crystal ball. Shout out to Jax. I swear I don't have a crystal ball. Maybe that's what's in the package. We'll see. Maybe there's a crystal ball in the package. That would be lit. Everything will go to 0. Shout out to Visionary Post. Everything's going to 0, especially XRP. Visionary. Isn't that right? Shout out to Visionary. All right, let's see here. Shout out to Visionary Post. Said, this is my 4th cycle. I know the charts very well. Yeah, if you're going off the cycles, in that case, if you're just going off the 4-year cycle, this would be your prediction, right? Not looking exactly like that. But if you're going off just the 4-year cycle alone, right? Actually, you could just do this, right? And it's really hard for me to say that, like, it's hard for me not to say it wouldn't shock me. But you would just be looking for this exact thing, right? And if you wanted to get the actual, pullback to $30,000, you'd be looking at this. In that case, if you're not a trader, right, you could just kind of walk away and wait for 30K. I won't do that, all right? And obviously, I'll be here every day. But, yeah, if the 4-year cycle plays out perfectly and, like, absolutely rhymes, it would look exactly like this. But, of course, markets are dynamic. They change over time. The market caps get higher. The asset matures. You have institutions in now, so things do change. But we'll see. Only time will tell. 2 scenarios I would look at, right, is like something like that, right? And, again, I'm not expecting it to look exactly like that, right? But this would be the less painful situation. Lose that POC. Traditional 4-year cycle situation. Those are the 2 kind of scenarios I'm looking at. I am very open to something like this playing out. And I don't know, guys. Like, I don't have a 100% certainty that this scenario is going to play out, right? No one's ever going to have that 100% certainty. You know, some people will say that they have 100% certainty. That's just untrue, factually. I wish I could come up here and be like, don't worry, we're definitely not going to 30K. But again, it's an if this, then that statement for me, right? There's no reason for me to, definitely be looking down here. I can keep it in mind. 4-year cycle would make a lot of sense. But again, even here, right? I had targets at $12,000 and $14,000, right? And then below that, like around $8,000, which a lot of people were just saying, guys, the bear market's just starting, 8K incoming, right? All those people miss the bottom. Was there a chance that it could have gone down there? Of course, right? I would have continued to dollar cost average, in which case I would have had an even lower entry price. But, when I have these targets, there's a target here, there's a target here, there's a target here, there's a target here. Doesn't guarantee that they're all guaranteed going to get tapped, right? Same thing with $137,000 and $130,000 at the top. If I see the top formation coming in before we hit the technical target, I'm going to be saying, hey, guys, this doesn't look good, right? I don't always wait for those targets to hit. If the targets do hit, I'm like, okay, cool. I'm at my target. This is a place I've been waiting for. But I'm never just going to kind of sit here and be like, we have to hit 137K. That is a losing proposition, in my opinion. But we'll see. If the 4-year cycle repeats, there is a part of me that wants the 4-year cycle to repeat because it really does. It is nice to kind of have that like baseline assumption of what the price is probably going to do. Shout out to Zach, said it's exactly, thank you for the super chat, bro, said it's exactly 22.2%. Maybe a coincidence, maybe not. Shout out to Zach. Yeah. Bitcoin does have interesting moves, right? Like we topped out at like 69K. Like that's just like super Bitcoin. I don't know. There's like a lot of weird things that happen on Bitcoin. I never trade off of them, obviously. But they do end up being very interesting in the long term. Shout out to Lindo, said you don't have 100% certainty, but you do have a crystal ball. There's no crystal ball, guys. Don't investigate, but I swear, there's no crystal ball. And if it were, it would be hidden very well that no one could find it. But anyway, all right, let's see here. Strategy would go down big time. Yeah, if we go to 30K, strategy would probably be pretty smashed. Shout out to Grumpy. Shout out to Grumpy. Thank you for the super chat. Said, hey, Frankie, hope you're doing great. Is it okay to ask you to look at hype? Shout out to Grumpy. Yes. Friendly reminder, guys. Please do not super chat your altcoins. Doesn't guarantee that we'll look at them. I will try to take a look at some. I guess we can run through some of the alts. Is Tony D? Where's Tony D? Tony D is here. Give me 1 second here, guys. Okay, cool. So we got the beautiful. And then, Tony, if you could just super chat the decision, that would be awesome when it comes in. But I will take a quick look at the alts Let's see. Okay, so Pepe, I'm just going to pull, this is already up. Pepe, shout out to Grumpy. I'll take a look at hype for you as well. Again, please don't super chat your altcoins, but I will just look at this one. Pepe pushing into the support levels, right? Very important support. I would say, we're at one right now, kind of starting to lose it. 786 between about 338 and 334 is the last part of the zone, right? But at the end of the day, the line in the sand is going to be that value area low, sitting here at about 321. Once we lose that, guys, I got to be looking down towards 279, 274. Come fill this larger wick from October. Got a daily down there as well. Other than that, not too much of an update, just kind of still wiggling our way down there into the supports. But if we're looking for the continuation of the uptrend here, that 786 would be an important level to hold in order to get another higher high into the monthly MPOC and then this Fibonacci retracement zone. But yeah, other than that, Pepe kind of just still on track here. Take a look at Ethereum real quick. So we pulled up some levels on Ethereum here in case we saw the same thing. I mean, obviously, if Bitcoin got the failed auction, obviously Ethereum would follow. We did get that. We lose the support. We come down. Ran right through the daily MPOC. And as you guys know from yesterday, right, like, and I'd like to at least come down to the Fibonacci retracement. This daily MPOC is kind of sitting by itself. We have the support resistance flip here. You have this previous support. You have the golden pocket. That's why I have this SR flip. I can actually probably move this over here. So we have the golden pocket 786. This is key support for Ethereum. If we end up losing this level, right, it's very similar to Bitcoin. We do not want to get accepted back into the range. I could probably extend this slightly. Doesn't really move the levels. But at the end of the day, guys, like if we want to continue this uptrend, in my opinion, this is the kind of first level of support. If we lose this, you really want to stay. You have confluence here. You have the 2 daily MPOCs, weekly MPOC value area high. We want to stay out of this range. We do not want to get accepted back into value. If we get accepted back into the value, well, guess what? Probabilities become higher to come on down towards that POC and the value area low. We do have a 786 sitting here at about $2,000. I just don't want to mark off this as like some kind of, this is all support, right? We're looking at the lower time frames here. So this is where most of the confluence is. Technically, your 786 is like a last defense before the POC. But for me, as a volume profile trader, once I get accepted into that profile, I really do prefer to see that POC hit. POC is also closer to the value area low, which sometimes makes the lower end of that volume profile a really strong magnet. So very simple, lose the value area high at 2,066. I would look for an eventual continuation down towards that POC slash value area low. Shout out to Tony D. Interest rates remain the same. Thank you for that, Tony. Shocker. Oh, man, we might be in for a nothing burger here, guys. As expected, yeah. Almost every time. It's like 98% of the time it is as expected. Of course. But yeah, so for Ethereum, right, these would be the levels I would look at. Very similar to Bitcoin, right? So you're pushing into the first level that we looked at yesterday, lose this, looking down here, get accepted in here, right? Starts to look a little bit worse in my opinion. People saying Bitcoin is moving. Getting a little bit of a bounce ski here. Holding the support. Trying to get back above the anchor VWAP. I'm going to take a look at hype real quick, and then I will come back here to take a look at some local resistances above. Let's take a look here. Hype. We haven't looked at hype in quite some time, I believe. All right, so let's see. All right, so the last time we looked was when we were making this low, which I believe was a 3-day bull div. Yeah, 3-day bullish divergence into the value area low. Yeah, 3-day bull div into the value area low. You have the golden pocket 786, major resistance here. We wicked into the larger golden pocket, which is pulled from the previous lower high. I'm just trying to get my bearings here, guys. So you did get a little resistance there, retest the range. That actually looks very technical, right? Bull divs into the low. You leave. You get the previous impulse out of your previous volume profile. Price seeks out fair value. You have the golden pocket resistance, rejection, retested the range high for a higher low. Now we have the higher high. I mean, you're just within your profile here. This is you got your 786 here. This would be and I'll even take this off, right? Because you have the POC confluent with that. But you have the 786 and the POC between 41.42 and 38.79. Ideally, you stay above that 786, but of course you can just kind of, your main goal here, if I take that 786 off the chart, would just be, I mean, even if you're not looking at the Fibonacci retracements, you're just looking at this from a volume profile perspective. Impulse out of here, price is going to gravitate towards previous fair value. Price gravitates towards previous fair value, POC, can't get out, back to the low, bullish divergences, back to the POC, back to the high, impulse out, price is going to gravitate towards the previous area of balance, resistance until proven otherwise, but at the same time, doorway to higher prices, you get the rejection, retest on the range high for a higher low, there's your higher high, get above the POC, and I'll go down to lower time frame. Back to the value area high, flip the low, POC is the next likely place for price to go, flip the POC, I mean the next major target to the upside is going to be the value area high at about 47.3. You have a weekly MPOC and the value area high. If we get cool-offs, right, the biggest key level underneath you right now would be the point of control. Simply put, right, remain above the POC, doorway to the value area high remains open. That's your biggest target to the upside, 47.30. Key support to the downside, about $39, around $38.94. Very simple. Flip the value area low. POC is eventually next. Little turbulence. Flip the POC. You could start your journey onto the POC. Flip the POC. You can start your journey to the value area high. Doesn't mean you can't get cool-offs, but if you do get cool-offs here, I would say the biggest level to hold is that point of control. Very simple. Really technical movement here on hype, right? Even with the bull divs at the low, right? Like these bull divs are very nice. High time frame bull divs are very nice. Daily money flow starting to cross back into the green. Don't hate that. Also, hype kind of on its own time here. Not to say, right, and if I pull from the full high to the low here, yeah, 786 is also confluent with that value area high, so that'd be a full 786 retracement. Oh, that was on log. But either way, whether you're looking at log or non-log, usually I look at log when it's over a long period of time. But yeah, I mean, it still just kind of lines up perfectly for that to be your next target. Golden pocket, this sits between, I'll do golden pocket value area high between about 44.37 to 47.69. And then if you get above that, you have your 786, which would really, I mean, the 786, honestly, is the line in the sand for a new high, right? You know, I wouldn't be surprised if you get some turbulence here, right? Even if it wicks up to the 786, but once you flip that 786, I'd be looking for a new high. If I'm looking for a high, a low, a lower high, and a lower low, this would be the place to look for that. But you do have daily money flow coming up, indicating the trend could continue to the upside. Line in the sand is that 786 at about 51.06. Flip that to support. Break above it. The only thing I can really look for is a new high. Invalidates the idea of that lower high. Now Max Long. Shout out to... no, for me personally, I would not be looking to long this, right? Again, doesn't mean I wouldn't look for long on a pullback. If that pullback doesn't come, right, I would just say I missed that move. If I wasn't long from here or here or here, right, I would need some kind of a pullback to look for a long on this. I would never long the green candles. Doesn't mean I don't think it can continue up, right? Like even here, if your bias is, hey, bull divs at the low, whatever, you see money flow coming up, you're looking for higher lows and higher highs, I would never long here. I would have to wait for the pullback into a key support level. And sometimes you don't get that pullback, right? In which case, what do you do if there's no pullback? Well, I just missed that move, right? You have to be okay missing moves, right? Otherwise, you're going to take bad trade after bad trade, and you're going to eat up your account consistently. Interest rates unchanged. Yes. Shout out to Steve. Shout out to Steve. Hype way overbought. Yeah, of course. Definitely not a place, right? I just look at this, right? I'm not holding a long on hype. Like, oh my God, should I long this? I have no interest in longing this. Again, if it goes up, great. I don't care. But yeah, I would never long this. I'm just, in my opinion, when I talk to myself, I'm like, oh, hey, if you're not long from here, you're late, right? So there you go. There's a little look at hype. Let's check back in on Bitcoin, starting to push back up here locally. So if we do get a continuation up here, guys, I will pull some key levels. I will pull the Fibonacci retracement from the drop or the start of the impulse here, sitting between 72,931 and 73,511. And we'll see, right? If we get we get some volatility here, this thing starts pumping to the upside, right? This would be the first kind of local level of resistance. 45-minute money flow still in the red. 80 minutes still headed out. Got the green dot, though, so bouncing off the golden pocket, we'll see. If we get a bigger retracement, this would be the first kind of major level to look at. If we end up cracking through that, I would just pull this up towards the actual high of this consolidation, right, which brings you up back towards that anchored VWAP. So we'll see. If we can get a continuation up there, this would be the first major level. Shout out to 123 said, hey, bing bong, early stream today. We're live for FOMC. When does this guy go on? 2:30? I just got to get my pillow and my blanket ready so I can get ready for my nap. Yeah, CME gap was filled as well. We talked about that yesterday. We did have the CME gap down there, I believe, at like 70,000. Was it like 70? Let me pull it up. There it is, right? So we did come down, tap the gap. Another reason that made this an interesting level. Again, I'm not personally long here. I didn't need to take an aggressive long. Number one, I mean, we could still come down and put in the confirmations, in which case I will take a long, but if not, I am covered from the long down here, right? So if this just decides to rip up, I do have the long from the low. 2:30, yeah. Oh, man. Mrs. Candles is not here. Otherwise, I'd have her bring me my blanket. Do you consider much of month tops and lows? I assume you mean like a monthly level of horizontal. I don't know exactly what you mean. Like, we had a potential monthly here. If we close the candle above this level, we'll have a monthly horizontal support level here at about 67K. Yes, I just look at these as horizontals. Right? I don't know exactly what you're referring to, but for me, right, you have a monthly level up here, a naked monthly level. Once this candle confirms, if it does confirm green, right, we will have the monthly level down here at about 66.8. And you have another naked monthly down here, right, 25K. Oh, my God. But, yeah, if that's what you're talking about, I do pay attention to these levels. Could there be a possibility we recover back to 75K? Well, if we pull up those local resistance levels, you got the 786 here at about 74K, and if we do pull the full retracement from the high to the low, right? The reason I pull these local levels up is because obviously these are important, right? There's no guarantee you're going to get the full retracement, but if I were to pull this full retracement, if you get a full 786 retracement, that's your retracement back to 75K, right? Essentially. Right? I can't guarantee that's going to happen, right? I don't know. Again, this is why I look for the confirmations. You could also very easily reject from the impulse fib, right? And who knows, right? You could pull from these like local, hyper-local fibs as well. We're tapping into a hyper-local golden pocket 786 right now. So we'll have to see what happens. But yeah, I mean, if you go for the full 786 retracement, that brings you to 74.9 basically. Pretty dang close to 75K. Can't guarantee that, though. Another thing, actually, let me actually mark off these. We do have single prints as well. This would actually be nice and educational if we do end up filling them live on stream. I don't know if we're going to. It depends on what the volatility looks like. But let me just get this. 72,967. 73,492. All right, so we do have some single prints up here. We also have another small batch of single prints. 72,547. 72,622. Knew that looked wrong. There we go. So we do have some single prints here. I kind of look at these. These are kind of the same thing as like a low volume gap. You can look at this as like potential resistance, but when you have a big section of single prints like this, it's kind of like a low volume gap. You can hit your head on it. Once you get back inside them, they oftentimes do fill very quickly. So we'll see. Like often, actually, let me pull this up real quick because in the premium Discord recently, we did have a situation where there were some single prints right here saying like, hey guys, if we fill these, if we get up inside these single prints, we can see them fill very quickly. So it's a beautiful example. And just to show you guys kind of how that oftentimes plays out, I actually screen recorded them in bar replay mode to show them kind of how it fills, right? You start to push into them. It's very likely that they fill, right? Boop, 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 boop. Sweep. Right through them. So that's oftentimes what I look for when you have single prints, something like that. So we'll see. I mean, they're still pretty far away at this point. We'd have to see some pretty big volatility to get up there. But yeah, we'll just have them marked off on the chart in case we get up there. Set some alerts here. Single prints. And then I'm not going to keep this fib here because it's kind of far away. And you can see those single prints are also confluent with your 786 golden pocket. So we'll see. Could be an idea. Pull up the chat here real quick. Yeah, shout out to 792 said, yeah, thank you. I see you like to mix MPOC, VP, and fibs. Just didn't notice yet if you mix in some horizontals. Yes, absolutely. Anytime I mark off a chart, I kind of start with, I start on the monthly chart. I mark off my monthly horizontals. I go to the weekly. I mark off the weekly horizontals. If you check out the beginner series, I show you how I mark up a naked chart from scratch. That's typically how I do it. Monthly horizontals, weekly horizontals, daily horizontals. Then I go back, monthly MPOCs, weekly MPOCs, daily MPOCs, and then I start pulling the fibs. I start pulling the volume profiles from high time frame down to the low. Please markets crash. I'm all in cash. Shout out to Div X-Ray. Well, I hope it dumps for you, brother, so you can get on in. Frankie's the best channel on YouTube, brother. Shout out to Iron. I appreciate you, brother. Smash that like button if you guys appreciate the free content here covering the live FOMC price action. We got 15 minutes till Grandpa Powell starts talking. I feel bad for Powell, man. As somebody, I always say this. That's somebody's grandpa, right? He's like, I don't know. I feel bad for him. He's got a hard job, man. He's just like always pissing everybody off. George said, can somebody link that video? Just go to the beginner series playlist, and you'll see it in there. I recommend watching them all. It's kind of like a free beginner course. And then you come back to the live stream and you know exactly what we're looking at. Do I prefer EMAs or SMAs? They're not really a huge part of my strategy. Really, when I look at moving averages, I'm usually looking at them on a higher time frame. I do prefer SMAs in that case, but again, it's not really a huge part of my analysis. Not that it shouldn't be a part of your analysis. It's just for me personally, it's not really a big thing that I look at. They're just different things, right? EMAs just react quicker to price. SMAs are just a little bit more slower moving. No way they allow Trump to have a good economy before November elections. I don't know, man. Bullish or bearish? Shout out to Jake from Reddit, cousins with Jake from State Farm. Bullish or bearish for the meeting, Frank? I'll be honest. It's going to be the same sentiment as the last few meetings that we've had. The decision is exactly what was expected. So usually, this is how I handle this stuff, guys. Like, if there's going to be like some kind of a big reaction because of the news of FOMC, and of course, like when they start asking him questions, that kind of creates the volatility. People try to see if he's hawkish or dovish. But at the end of the day, right, like if there was an expected no change, if he came up and he was like, we're actually going to start aggressively cutting rates now, and it was unexpected, that's where you'll see like that news actually start to give you like a massive push up, and vice versa. So I'm kind of neutral, right? And I've pretty much been neutral from a chart perspective with the money flow coming up, at least on the 16 and the 12 hour, as well as the 21 hour as well. You know, I'm open for higher lows and higher highs, right? Obviously. Overall, I am covered here, whether we get the big drop, like inside this range, like even up here, guys. I said this yesterday. I don't let my personal biases really affect my trading decisions, right? like up here. Yes, we have the low volume gap above, right? Is that going to change my mind? Like, does that, just because I know I have a low volume gap above here, and if we break into it, we can get a big move up, does that mean that I'm going to long up here? Absolutely not. I did not long up here. I did not FOMO. I actually took a short. Why did I take the short? Very simple. I had a trap up there, right? I had my key levels of resistance. I saw the confirmations. It's binary. I hit the key level. I see the confirmations. I take the trade. If there were no confirmations up here, I still wouldn't just long it at the top, right? I would just say, hey, we're probably going to squeeze up, but there's no real setup for me to take here, right? I'll just have to let price go up, wait for the next trap, and then take the next short, or wait for a pullback for a long, which in this case, it was very nice, right? Because we came into that trap, we had key resistance, we saw the confirmations, we shorted that sucker. The idea here with the money flow coming up was a higher low and a higher high. So what did I do? I shorted this thing down, made a few $1,000s in profit, took the long, currently up like, I think, $4,000 or $5,000. Let me see. I think I have this open. Where is it at? Where is it at? Believe it is right here. Yeah, up about $4,774, right? So I am still holding that long from down here. So for me, right, it's like I don't gamble on, like, a lot of people will say, are we going to 80K first or 60K, right? What comes first, right? Well, I could have my assumptions, right? Money flow is coming up. I could say if, right? It's an if this, then that statement. If we hold the support and get the higher low, well, then there's a very high probability that we can come up and make a new high. If we lose this, well, then that sentiment changes, and I'll be looking for the bigger drop down, right? Either way, I'm going to be making money. I'm also still holding my shorts from higher. With massive profits already locked in. These are already, I mean, these are from way higher up. So this one's still up like $9,000. And then I also have the one over here on WEX up about $10,000 with a ton of profit already locked in. So I'm kind of cushily, is that a word? Cushily positioned here, whether we go up or down. And the reason, right, it's because we're in a bear market, right? Like these money flow crossovers oftentimes in a bear market you spend a lot more time in the red than in the green. So I have that in the back of my head, right? Like money flow right now, this money flow is coming up. It's very clear, right? That gives me the idea of potential higher lows and higher highs, right? Even if we have to go a little bit deeper, right? But in a bear market, money flow does like to spend a lot more time in the red than the green. So if it fakes out, I'm just not going to be super surprised. It doesn't mean I'm not going to react and long based off the money flow coming up, right? I've already up a bunch of money on that trade, but it just wouldn't shock me if we go down. I think this is like one of the biggest things that people are like, I don't get it, man. It could go up or it could go down. How do you make money, right? We're obviously making money here. You have to kind of change your mindset from a prediction-based mindset to a probability-based mindset. But what if it doesn't continue up and you take a long? It's very simple, right? You just lose the trade. You're never going to be able to take a position. Let's say you want to target $80,000 for a long from this key level of support. At the end of the day, you have to take a risk. There's a chance that this won't play out, right? There was a chance that this long wouldn't play out. There was a chance that this short played out. They both did play out, but if this short did not play out, I would have stopped out for a small loss, right? It just is what it is, right? You have to take a loss at some point, right? You have to take many losses sometimes. So, you know, I think a lot of people get stuck here. It's like, all right, we're at key support. Like, should I take a long? What if it doesn't play out? Well, if it doesn't play out, you just get stopped out for a small loss, right? And then you live to fight another day. I got stopped out on a short up here, and then it played out. I just don't care. Right? And actually, I pull it up in the Discord just to kind of show you guys. I don't want to, right? I did get stopped out of a short here. I think I showed this yesterday. I got stopped out of the short, right? Obviously, the idea was, are we going to get the failed auction, right? It could go up, could go down. Well, then what do I do, right? You have to position yourself correctly. There's a valid short setup up here. If we get the failed auction, we're looking to come down here. Obviously, that ended up being the case, right? Failed auction, back down to support. I took a short. I wound up getting stopped out at break even. Still played out. I was right on the idea. Not poor execution, but I just chose to have a tighter stop loss. I knew I had a higher chance of getting stopped out. It's a risk that that's another thing, right? People are like, but if I have a tighter stop loss, I want a bigger position size, but I need a tighter stop loss. But what if I get stopped out? Well, then you're in my position. You just get stopped out and you go, okay, cool. Now I just make my next move, right? And then if we don't get the pullback and you get up here, right, and you flip $75,000, you're able to hold that support. Well, big push up to 80K is very likely. So I got stopped out here, but guess what? I lost $153 on that short, while the long is up $7,154, right? So I could get stopped out of those trades 100 times, whatever. Like I could get stopped out a ton of those trades, and it's, you know, I'm well hedged here, right? So if price decided to just continue up, well, guess what? That $150 loss gets paid for plus much more profit on the long position, right? It's more about positioning than a lot of people get into trading. They'll be like, I need to figure out exactly when it's going to go up or exactly when it's going to go down so I can enter, get in, and get out, right? That is the most important part of trading, is not knowing if it's going to go up or down. Almost every day, I go on the chart and I say, okay, it could go up, it could go down. How do I position myself to take advantage of both directions? That's how you trade, right? Not, it's going to go to 80K, let me long here. You could, and if you have a good risk management strategy, well, if you get stopped out, it's not a big deal, right? And it's not sitting up here going short and long at the same time. I'm not interested in longs up here. Even if it continued up, I'm only going to take the short and take a loss on the short. I'm not going to long and short at the same time, right? I'm in a long from down here, and then I would be in a short from up here. I would never look for a long up here. As I mentioned yesterday, I would never look for a long up here, like we mentioned when we came up and took the short here. I was like, I know everyone's feeling FOMO. Everyone feels like they missed the move. I can't look for a long here. I can only look for a short. What happens if it stops out? Well, I just lose the trade. It's okay, right? Of course, that wound up playing beautifully in our favor. But same thing here. Could go up, could go down, right? I take a shot at the short. If I didn't get stopped out, I'd be holding the long in like $5,000 in profit, and the short would be up pretty decent too. So you got to switch. The easiest way I could say it is you have to switch from a prediction-based mindset to a probability-based mindset, right? And again, right, when you look at this, you could put probabilities on it, right? What is the probability here? In my opinion, the probability is higher that you come down just because you're already at resistance. You're already looking for the failed auction. Once you lose support, there's a higher probability you're going to come down, right? And you can use that to kind of base your, give yourself a little bit of a bias, right? You're never just, not always looking at it as a 50-50 shot. Is there a higher chance that we go down or up from here? I would say you're at resistance. I would only look for a short because the higher probability is that you reject. Doesn't mean it's guaranteed. If you hold 75K and you flip that golden pocket, the higher probability chance becomes the big move up. Set your traps in the market. This is a trap for a short, not a trap for a long. Trap for the long was down here. I only take trades at those key levels. Anything that happens in between, I do not care, right? If price is dumping here, I'm not going, oh my God, should I short or long? I'm just saying the trap is down here. I'm only going to long if price comes down here. And if I'm not short from up here, I don't care. I've already missed the short. I'm just sitting on my hands waiting for the next trap. Then I take the long. Oh my God, if you miss this move, you catch this move, right? If you miss this move, you can catch this move. I always say this every day. The faucet's always on. As a trader, you have to keep both scenarios in mind. That's literally how you make money. So hopefully that helps you out. Can we listen to Powell together, Frankie? Yes, we will pull him up. We got about 5 minutes left. Let me see. Let me pull up my face cam here. I don't want to leak my social security number. I don't know why my social security number would pop up pulling up a FOMC live stream, but can never be too safe. I have PTSD from the Holy Stream. Shout out to anybody who saw the Holy Stream back in the day. Some people who don't know are going to be like, did he show some kind of hole on stream? I didn't. I didn't mean to, at least. It wasn't my hole. It was, I don't know who that guy was, but it was traumatizing. There we go. Shout out to Tony D. New YouTube link. Okay, thank you, bro. Tony D on point here. All right, let's see. Come on. All right. Bear with me here, guys. All right. I will mute this for now. And we'll pull up the charts while we wait for him. All right, let's see. Pull chat back up. Shout out to Mr. Real Dank says, are all your trades posted in the premium Discord? Would that be a better place to learn more about taking actual trades? Yeah, shout out to Mr. Real. Yeah, I share my personal trade setups. It is not a signals group. I do not tell you, buy right now, sell right now. I share with you the trades that I'm taking, and more often than not, right, like for this setup here, for example, it's exactly what I just showed you in the premium. Right, typically the setups are going to be set up ahead of time, right? Like, for example, right, more often than not we were looking at this trade a long time ago, right? But more often than not, it's like you'll be hanging out down here. I'll have the key levels up here. I'll have the trade set up. If it's close enough to for me to front run the confirmations I'm looking for, I talk about what I like to see there to actually take the trade. So you'll kind of know, like, hey, if we get up here, this is where we're looking for the shorts. We're looking for X confirmations, and I just give you my overall trade ideas. But it is not a signals group. I don't just like drop in there like buy at this price, stop loss at this price. That doesn't work in my opinion, right? Like if it was that easy, I would have never learned how to trade, right? I would just got into a signals group. I would have set up a bot to trade those signals. I would just print infinite money, right? There's a lot more to trading than that. We also go deeper into on the live streams on like how to manage your trades, how to control your psychology. I teach more in depth the strategies that I use. We go more into the order flow, etc. So yeah, that's more what we do in the premium Discord. But if you don't know anything about trading, first watch through the beginner series. There's so much free content on this channel for you to learn how to trade. This would be like kind of the next step, right? Once you understand the TA, if you don't know how to mark out key levels or anything like that, you've never watched any of the tutorials, start there. It's free, and then once you get into the Discord, you won't be totally lost. But yeah, it's usually like the next step. If you want to take your trading to the next level, you can get up in here. Let's see. Where's the FOMC theme song? BRB, guys, I forgot. He's about to come on. Let's give a warm welcome to our special guest, Jerome Powell. Oh, man, Jay Powell, baby. Jay Powell, let's go. Here he is. Let's do it, guys. Let's do it. I'm going to go get my blanket.
Economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%.
Let's check the chart here.
But the implications of events in the Middle East for the U.S. economy are
Pretty
uncertain.
boring so far.
In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy.
Little bull dip.
The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Here we go.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of the performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and now there will be some effects on inflation coming forward. The thing that's really important that we see this year is progress on inflation through a reduction in goods inflation as the one-time effects on prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to
Purple
be seeing
tie, what
that,
does that mean, Mafia?
To sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations remaining well anchored. And I think now it's also dependent on what you mentioned, which is that broader context of 5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the SEP, can you help us make sense of why there is still a bias to cut for most
Volatility
officials this
incoming.
year,
BTC Bill
despite the upward
with the 20
revision
Frankie
to
Candles
headline
membership.
and
Let's
core
go. I appreciate
inflation
you, bro.
And the essentially
Little
unchanged
FOMC
forecast
giveaway.
for growth and unemployment. Just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so, there are 19 people, and so 19 reasons, 19 individual submissions.
Shout out BTC Bill.
And if you notice, the median didn't change, but there was actually some movement toward, a meaningful amount of movement toward fewer cuts by people. So 4
Purple
or
is
5
neutral?
people went from 2 to 1,
the
let's
worst.
say. 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that,
gray
the
action?
forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
Howard.
Bulls in the chat for BTC Bill.
Thank you. Howard Schneider with Reuters. Just to follow up a little bit and to be clear, is the higher inflation penciled in here for 2026 solely the result of the oil shock or something else?
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also just the feeling that we haven't seen, the progress that we had hoped for on core goods. And on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and the price of oil, but it's also, I think, a reflection of the slow progress we've seen on tariffs, which we believe we will see. It's just a question of how long it takes for them to get all the way through the economy, and it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will pass through, or more out of concern that there is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas prices, diverting spending from other parts of the economy?
So I didn't get the second part of your question.
That consumers are going to be potentially diverting money to gasoline from other parts of the economy. There could be a growth shock.
1 minute
or a
money flow coming out.
redistribution of
Get
spending
back into
there.
this
They could get
range. Look for the
consumption,
POC.
wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have if we have a long period of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on consumption. But we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one, because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down, and this is something that is that people wrote down.
We don't know. We got to write something, though.
So
we're just guessing.
We don't debate how long. How do you do that? We wouldn't be able to debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And also, what you've written down before you'll be reluctant to move too far away from that, just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid.
Charcoal gray.
And inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs, with little growth in either demand or supply. But the U.S. economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to
Shout out to
domestic
Lucia.
production.
I got my
What do
extra
you
large
talk about
coffee.
that dynamic, especially to the extent that how much U.S. production is happening right now?
So the first thing is, there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past,
Yeah.
about
So there'd be an offset.
offsets, yeah.
So that's true. We're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long time. So they're not sitting there waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment that we're going to have higher oil prices for an extended period, meaningfully higher. So I wouldn't say there's much of that happening, not much of it happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that, having looked through tariff inflation and inflation running above target, and looking through the oil price shock, would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware of the history, and but you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision-making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timoros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is
Mark
roughly
Zuckerberg.
stable, inflation moving
disguised.
sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months, a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be, for many years, it was negative, and then the year before tariffs came in, it was 0, and it's running at like 2% now. So. And so that's kind of, goods inflation is running at 2%. So that's not coming from standard Phillips curve restrictive, restrictive policy. It's coming from the runoff of a one-time thing. We also think it's important, though, to keep policy, either mildly restrictive or close to that, but not too restrictive because
Little
of the
wick down to
weakness
the
in
786.
the downside risk in the labor market. We are balancing these two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to inflation are to the upside, which would call for higher rates or not cutting anyway. So we're in a difficult situation, and we feel like our framework calls on us to
15-minute red
balance
dot
the
printing,
risks.
a 1
And we
hour
feel
money
like
flow
where we are
coming
now, which is
out.
kind of on that borderline, the higher borderline of
He loses POC. I'll be
restrictive
looking down at the
versus
786.
not
See if that money
restrictive.
flow
And
continues
we feel
out
like that's
here.
the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much,
She's
if
happy.
at all, over the past
She's not being
year.
harassed.
If
Oh,
wage
pull up
growth
your
has
shirt.
come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is continued, what we want to see for this year, rather, is continued progress on housing services, finally seeing that, the goods inflation come back down because the one-time effects of tariffs are through, and then also get some help from non-housing services. That's what we'd like to see. But it's a good question why we didn't see much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So in December, we saw employment numbers revised down to negative 17,000. January revised down. February posted a loss of 92,000. Is the employment side a far greater risk than the inflation side? Because we are seeing inflation. CPI is close to 2%. PCE has ticked down overall.
It's really, I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to
She's not
the
doing good,
unemployment
guys.
rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation.
All right, Mrs. Candles, you're deflating. She's tired, guys. She's tired.
We're at 3.0% core. Inflation 2.8% headline.
The shiny
so
guy.
We've been well above the 2%.
All right, one minute money
that
flow,
amount,
guys.
whatever it
Continuing
is.
out. Trend continues down.
0.7, 0.8.
Look at
or
this.
a full percentage point above 2% for some time, and that's a concern. We need to get back down to 2%, and we need to keep focused on that, even though we do now
She needs a
face
neck
some
brace.
new inflation from energy. So I'd be hard pressed to say that one of them is obviously more.
15-minute red
dot.
dot, 1/16 on the
If I
lower
may,
time frames.
what
We'll see if we can lose this
happens,
POC.
if there's no Federal Reserve chairman confirmed on May 15th, would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over, with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you will all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to say.
Dude, he's probably going to go on the biggest vacation when he leaves.
And I'm not going to have any more to say on those issues, by the way.
He's got to be
Thank
exhausted.
you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
It's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up, if I may, just on the BLS report that was mentioned briefly there. It doesn't seem from the projections or from the comments you've made today about the unemployment rate and focusing on that your view on the labour market story, to a large part being a supply-side story, has changed despite the quite negative number in February. Would that be the right take, and was there anyone else in the room who thought differently and that the February jobs report was cause for concern?
So I think you have to take the two together. You know, in a way, the January report was a positive surprise, and the February report was a negative surprise. If you put them together, you get something in the middle, and I think you have to really, as you do, I'm sure, realize there was a strike and there was weather, and that's about 80,000 of the negative effect total on the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that
Can't make it up, guys.
a degree of stability.
Markets FRB.
But the thing that I think
and volume profiles, I guess,
a good number of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job creation over the past, let's say, 6 months, if you adjust that for what we think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually that looks like that's about what the economy needs.
Bitcoin follows the
in terms
magical
of
line.
dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there, and but nonetheless, something we watch carefully.
Down to the value area low.
Thanks, Chair Powell. The economy's experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think that is bad luck, or has something changed in the world that makes supply shocks more common, and does the central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where
3-minute money flow
shocks were
coming
all
out.
demand shocks.
45-minute red dot looking to
so
print.
we've had a lot of practice thinking about supply shocks in the last 4 or 5 years for sure. And it's just a very different thing, and a very much more difficult
Still have
thing,
the
because it does immediately
second part of
raise
that big key level of support down here on the weekly
tension between
MPOC.
the two parts of our mandate. But it has the world changed? I mean, COVID is a one-time thing, right? This energy supply shock is a one-time thing. It's not because of some broad tendency or anything, I don't think. And the oil shock with Ukraine was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks. But there's people have written that paper and that speech a number of times. A number of people have tried to make the case that is the case. And in fact, we have seen more supply shocks in the last 5 years than we've seen in many years before that. It's a fact.
Okay. You said last year that the Fed was reviewing its communication strategy.
Lose this 786 decisively. High chance.
Whatever
we break
happened to
this
that?
low. See if we can hold that 786.
I have like 5 follow-ups to that, but I guess
Doesn't look good.
What would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, we we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio. The minutes show in January some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the Strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is, it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens, and it'll come down to how long the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business services as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee, and what were the views of what is the state of inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth, and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in
Tony Montana is crazy, bro.
But sorry, and your second question was just.
if there have been any discussions about the risk of stagflation, stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. You know, when we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal. And we have inflation that's, 1 percentage point above that. So calling that stagflation, it's not, I would reserve the term stagflation for, a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. President Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that.
When we're thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
Give it to me.
We don't know how big these effects are going to be, and I don't want to characterize them in any way. Of course, people are already seeing gas prices. Gas prices are up almost $1 a gallon. We hope that isn't for a long period of time, and of course people will feel that, but I don't want to speculate about what that might mean, because honestly that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at
Tony,
that.
can you put a poll up if people want to continue to watch this or just look at the charts? Let me know what you guys want to do.
Hi, Victoria Guida with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have oil prices, above $100 a barrel the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I mean, we always say we're going to learn more by the next meeting, and usually we do, but in this case we're going to learn a lot, because we're going to learn.
We'll keep it running for a little bit longer. We'll keep the charts open.
Meeting. And we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves with what happens in the Middle East. That's going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't. And we did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and I just want to remember that we don't know, and we shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot.
Shout out to Sahil.
22 and 23.
What is going on, brother? Welcome in.
And
good to see you,
close
brother.
to 100% of economists called for a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just...
Everybody thinks it's boring.
Just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see. And I don't,
for the POC?
I don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Hi, Chair Powell. Thanks for taking our questions. What makes you so certain that tariff-related price increases will be a one-time effect? I don't think we've seen you since the Supreme Court tariff decision, and it's pretty clear that none of us know what the extent of the tariff shock will be as the administration moves to replace some of the tariffs that were overturned. So I suppose I'm curious, what would make you question this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word certain about my views on that. I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, it would be over. So I don't have tons of confidence on that. I mean, I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought. So I think we have to be humble about knowing how long it will take for tariffs to go all the way through the economy. And so what we've been doing, as our staff's been doing, it's very interesting. They started off with just an estimate because there wasn't a real history, and then they've built, based on the history that they're seeing of tariffs coming through into prices, they can now have an arc. And for all the tariffs, they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases. And we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's how we think about it.
Thank you.
Hi, thank you. Chris Rugaber, Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year?
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. It's your opinion at a moment in time, which can change based on events. Sometimes very quickly. So it never locks people in. People are more than happy to be proven wrong in either direction. And so I just think we do it. And, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one meeting off, I think. But we don't like to do that just because it's
Shout out to
hard
Sahil.
to
I'm going
do.
to cover
We should
that.
just keep
I'll cover that
going
when we cut Powell.
I just would say for this one, though,
which will be soon.
I think it's even more than usual good to take the forecast with a grain of salt, because subject to just very high levels of uncertainty.
Brian Chung with NBC News. So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street. Are there any signs to you that that's impacting the psychology of the consumer, especially given that they're a big driver of overall economic activity?
I'm not sure what that's all about, but I'll tell you what I think and what we see in surveys, and that is, there were big price increases all around the world, by the way. Everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like they real wages have been going up in the United States now for 3 years, roughly. But people are not feeling good about it yet, and it will take some years of positive real earning gains for people to feel good again, we think. But you're right. But when you talk to people, they do feel squeezed, and there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and what it does for us is makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and stable prices is half of our mandate. It's one of our 2 mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see.
I think, let's see here. Back to the charts. All right, we're going to cut this guy. We're going to cut this guy. Typical FOMC guys. Should we fade him out slowly and epically?
It's critical that we have that so that we can do the things.
Goodbye, Powell. Shh. It's okay. It's okay. All right, guys. So nothing really that crazy, at least just yet. But yeah, we're just kind of bing-bonging around. But you guys can see, looking at that 1 minute money flow crossover, and just kind of be a little educational here. Not looking for, some kind of major move, like not, oh my God, I mean, could you have shorted that? Sure, right? Back below the value area high, back to the POC, back to the low. Of course, you start getting support on that value area low, head back to the POC. Just some, just clean, when I look at the charts and I try to identify what's going to happen, this is generally what I'm looking at, right? I understand once I lose that value area high locally, POC is probably next. Once we lose the POC, probably going down to the low. You guys saw me draw that line. It was simply just based off the fact that we had the 1 minute money flow coming into the red. This is not, oh my God, we're going to 40K. But just on the 1 minute time frame, chances are the trend will continue down. Very, very, very simple. And then combining that with the volume profile, making that a high probability movement right there. But with that being said, right, just kind of chopping around sideways here. Really what I would like to see here, guys, from a, it just doesn't really change the sentiment from the beginning of the stream, right? We got the little push up, right, little push down. But overall, we do still have this key level underneath us, right? We have the untapped value area high. We have the untapped weekly MPOC. And we also have the untapped daily MPOC at around like $70,600. And when I pull up EXO charts here, you can see that MPOC sitting right down here. And when looking at this from a market cipher perspective, obviously your 30-minute red dot is printing. And in the beginning of the stream, when I talked about kind of not seeing any kind of like true big confirmation down here for a significant bounce, right? I would like to see another lower low come in on price, right? Potentially looking to print that 30-minute bullish divergence. And we do have that key level underneath us, right? We are technically bouncing from the golden pocket, but let me just hide this. Let me just drag this down to the untapped levels, right? Right now, this is still, right, we're generally inside our major level of resistance, or I'm sorry, support. Let me go ahead and let me hide some of this stuff. Boom, 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 boom. All right. From yesterday, we look for the rejection back down. We know this is a key level of support. Obviously, a zone between about $71.5 all the way down to about $70,080. Again, I don't really see, from a market cipher B perspective, there's not really a ton of confirmation here. Does this mean we cannot bounce from where we are now? Sure, you can. But of course, looking at this 30-minute red dot just disappeared. Interesting. But really what I would like to see is I would like to see another push down here. Again, this is coming from someone who's holding the long from down here, so I'm already covered on the long. But if I were not holding the long right now, I would really like to see a deeper push into the level, being very patient. If we could form some kind of bullish divergences deeper into that level, that, in my opinion, would be more what I would be looking for, right? And then hopefully get the bigger bounce to the upside. But yeah, I mean, we're just sitting inside the key support. We'll see if, 1 hour VWAP starting to roll over. From a money flow perspective right now, guys, you got the daily red dot printing. You got the 90 and the 80-minute money flow trending out. This does not mean you cannot get ebbs or flows. Remember, the money flow does indicate the overall trend, right? Trends have ebbs and flows. So if we do get a significant retracement, the biggest level I will be looking at above us, right, or at least locally of course, you can pull this Fibonacci retracement to the actual high of the move, but until we get above this fib, I'll be looking at this one, right? Until we get above this one, if we get above it, right, that's where I pull to the full fib. There's no guarantee you're going to get to that full retracement, so I will keep it from the impulse here. This does sit between about 73K and 73,525. Of course, you do have the single prints in there as well. Where are they at? Right, you do have the single prints in there as well. So if we did wind up getting a big push to the upside, right, we get above the anchor VWAP, we push up. This would be the kind of biggest level of resistance I would look at. The first level I would look at for a lower high before a lower low. If we're not going to come down sooner than later. Again, I don't know exactly what's going to happen here. If we get the 30-minute red dot to continue to print here, and we get that second drop down, right, this is our biggest key level of support. As long as we remain above this, I will be interested in higher lows for higher highs. If we lose this level, of course, this becomes a bit more bearish in my opinion. This is essentially the zone, whether we have to pull deeper into it or not. This is where I would like to see that higher low come in. If we lose this, I'm looking at this from a much more bearish perspective, looking for the POC at 68K down to the value area low at 65,000. This is pretty much the same plan we had yesterday. We just wanted to see that failed auction for the drop down here. Here's your opportunity to look for the bounce. Again, a little bit of a sneak peek. If you can get another bull div in here, that's what I would pretty much be looking at for some kind of a bounce. If it doesn't hold or it fails, I'll be looking for the bigger drop to the downside. So other than that, kind of a nothing burger here on FOMC. Came out as expected. We'll see. Sometimes it's a post-FOMC volatility. Maybe tomorrow we get a big move. But if we get the move up, biggest level I'll be watching is sitting up here. If we get the continuation down between about 70,750 all the way down to 70,065 is your last level to hold. And then once we get accepted into the range, very simple volume profile rotation, right? POC next, value area low next. So there you go, right? That is, and of course, you can look for like hyper local levels. You could pull your fib from the lower high to the low here, right? You get your golden pocket 786, which is what we're rejecting right now. But of course, I'm not going to pull up every single level, right? I would say the next major level with the single prints up here would be the big one to look at in confluence with this upper value area, right? Be it like a range retest situation before continuing down. Why would I look for that lower high potentially? Well, only reason I would look at that is if this 80-minute and 90-minute money flow is coming out, right? Yesterday, the 45-minute money flow on the live stream was what we were looking at to start the bigger trend down, looking for the loss of resistance or loss of support, 45-minute money flow crossover. That's where you look for the bigger drop. Literally, it is the signal that starts that big drop. And then, for today, right, the thing I would look for is that 80-minute money flow crossover. If we get that, that's probably going to continue the bigger drop to the downside. So we're at resistance. We break above. Biggest levels right here. If we continue down, you're going to be looking to the value area high, and we do not want to lose this, guys, in my own personal opinion. As we approach these levels lower, I will assess the price action as we tap into them. I have more interest in the value area low than the POC, but of course, if I see signals here at the POC, I will take that long. Until then, hold the positions I'm holding right now, which of course are the shorts for much higher with profits locked in, 2 of those, and then I have the long position here as well, up about $4,500. Maybe I'll lock in some profit on this in case we do get the meltdown. But again, I'm not really super worried about this long because again, if I wind up getting stopped out of break even here, chances are we lose this. We're going much lower. The shorts will pay me out a ton, and I'll lose no money on that trade. So. And then shout out to Sahil. He said something about the potential bottom coming in on the weekly higher low on the momentum wave, essentially just looking for a weekly bullish divergence. Of course, right, this is something we've talked about many a times, very similar to 2022, right? Lower lows on your price action, higher lows on your momentum waves. I wouldn't say necessarily we're set up really nicely for a weekly bull div, but when we look at like the 3-day here, if this ends up being the top and we get the bigger drop down below 60K, these high time frame bull divs have a very high probability of printing. If that is the case, we could look for the bounce down here. But of course, we're still really far away from that level. Until then, we still have the 16-hour and the 12-hour money flow in the green. Hopefully, this can stay in the green. It's a bit of a hard situation, guys. And the reason I've been a little bit kind of neutral within this range is because we're in a bear market. Yes, this money flow is crossing into the green. Again, that does give me the idea that you could hold these key levels for higher lows and higher highs. But if at the end of the day it fakes out, it's not shocking, right? If we come back to 2021 here, you could see money flow does like to fake out into the green, right? Like even here, very short period of time in the green, much longer time in the red, like even right here, like you try to cross over, you're back in the red. There is a good chance you spend a lot more time in the red. So I'm just looking at that. It's not that I ignore that money flow crossover. I'm just not going to be shocked if it gets a fake out, right? But I'm still in the long position. Doesn't stop me from taking the positions when I have the confirmations. But yeah, I mean, even from a horizontal perspective, right? If we dip back down here, hold that, definitely get back above 75K. I'm looking between $78,000 and $80,000. Break down below this, I'm really, honestly, looking towards the value area low. POC is an honorable mention, but the value area low is really where you have those that daily MPOC, the value area low in the 786. So key levels to mark off on your chart right now. To the upside, we break $75,000 and hold it. You're looking at $78,000 to $81,000. That is the next big level of resistance to the upside. For the move down, right, of course, you have the level that we're sitting in right now. Right? Don't want to lose this, bleeding down to about $70,054, $70,060. Right? So key level, and then, of course, the value area low. Let me just mark this out, right? Your value area low down to your daily MPOC here. I already have the blue box. These are the biggest traps I have set in the market, right? We lose this, looking down below 60K. We hold this, could be a higher low for a higher high. So those are the major levels I'm looking at. Everything else is going to be local, right? If we see this 80-minute money flow cross into the red for the continuation of the downtrend, that's where I would watch that local Fibonacci retracement right here between 73 and 73,500 in addition to the single prints. So those are the key levels I would mark off on your chart. Let's see. Yeah, shout out to Giggler. Says the dates of those past fake outs are so similar. Yeah, for sure. Yeah, 70K back test. Pray. This is the key level, guys. In my opinion, this is the biggest level, right? And again, not even just from the local volume profile, but also once you start losing that level, you're also getting accepted into your larger profile. The general idea here, guys, is whether you're looking at the local profile or you're looking at the larger profile, we don't want to get accepted back into these ranges, right? We want to stay out of here with money flow coming up. You want to stay out of here and continue up if you want the continuation. Once you get accepted back in there, just like any volume profile, getting accepted into previous lower value is going to open up the door to lower prices, right? So I won't pull this up until we end up losing the support. But for right now, I'll be watching the local. It's very simple, right? Like yesterday, we looked for the move down from here. Why? Because we do not FOMO into longs on the move up. We can only look for shorts. Wound up playing out perfectly, like literally following the line perfectly. Get accepted back in, right? If I were short from up here, I would be looking at that once we get accepted back into the range as a simple volume profile setup. Get below the value area high, look to go to the POC. Lose the POC, go to the low. Right? And again, if that fails, probably below 60K in my opinion. And remember, I know a lot of people are there, but like, if I long down here, right? I'm not telling you to long, I'm not telling you to short. I'm just giving you the analysis and what I'm personally doing. If you took a long down here, guys, what if it doesn't play out? Well, you get stopped out of the trade. You're going to lose trades, right? You have to, the sooner you understand that, I lose trades. I lost a trade yesterday. I showed it before. I lost $153, but the long was already up 7,000, right? So it doesn't matter. It's a small loss. I could take 10 of those in a row, no problemo, right? But yeah, me personally, just for some insight, right, I would want to see some kind of confirmation down here, which we don't really currently have. I'd like to see, like my original drawing here was push down in there, try to find some bull divs, right? Doesn't guarantee it'll play out, right? But like if I don't have those confirmations here, again, I don't set limit orders. Again, this level is untapped. I'd like to see these key levels tapped more often than not. If you front run the level, it's not impossible to get a bounce, but more often than not, you will come down and interact with those levels. And then this is your last line of defense before we start looking down towards $68,000 and $65,000. Come on, value area high. Hold it, baby. Hold it. Shout out to Rami. Welcome in. Said, yo, what's up, Frankie? What's going on, Rami? Welcome in. Shout out to 1300. Said, what time is the 80-minute red dot printing? I don't know. It's hard to say, right? I couldn't predict that, right? If we wind up dumping here, this red dot could print very soon, right? If we wind up getting a retracement first, This green dot can extend, right, and then eventually come down later. I would just wait to see if it prints. I wouldn't really be able to give it time. Like even here, it's like, oh my God, we might print the red dot soon. It gets rejected, winds up, the green dot winds up printing all the way over here. So it's really hard to predict the timing on it. But overall, daily red dot, 80-minute money flow crossover into the red. I would say that's what's kind of pointing more towards a continuation of the downtrend. But of course, your higher time frame money flow. Like, yeah, this daily money flow, man. Like, your 2-day money flow is crossing into the green. Your daily money flow is just still kind of flat in the red here. That's like a conflicting signal. Let's jump to 57K now. As you guys know, right, like my preference personally for the long term is to go lower. A little more time to accumulate, put in some of those high time frame bull divs. And again, not to say that those bull divs have to hold, guys. We can put in those bull divs. They could fail. We can go lower, right? But I need to see that information to try to call that probability. But yeah, I mean, big drop down. 58 to 55K is the big level of support. So we'll see what happens. Shout out to Visionary said, Frankie, red dot prints when TradingView updates at 8 p.m. The 80-minute VWAP, well, it can move live, right? But the daily candle will close at the end of the day, right? So this VWAP will move and confirm every 80 minutes, right? So you have 31 minutes left for this to confirm. If we got a massive dump right here, Visionary, and this red dot starts printing, and then, you know, in the next 31 minutes, you're dumping and that red dot is printing, and another candle prints, it'll confirm that red dot, right? So the 80-minute red dot technically can print as soon as, or confirm as soon as in 31 minutes. But again, right, if we wind up getting a retracement, this VWAP kicks back to the upside, another candle confirms, right? This is just going to overextend. The daily candle, at the close of every daily candle, you'll get, obviously, another daily candle and another confirmation, right? So right now the red dot is printing. If we've got some kind of massive rip to the upside and this red dot disappeared, and then we confirm a green candle, right, or we confirm another candle, that red dot will not confirm if it disappears. This candle has to close, and we need to print another one to lock in that red dot. Does look like it's going to confirm, in my personal opinion. But you will confirm, like, if we print a red dot right now and another candle confirms, you could lock in the 80-minute red dot as soon as 30 minutes. But, again, I wouldn't, like, guarantee that, right? Again, if we get a retracement, this is going to extend. Shout out to Dave, said, where can I learn about the 116 strategy? Check out the beginner series. I have a video explaining how to trade it, obviously for free, on the YouTube channel. Shout out to Visionary, says, always great analysis by Frankie. One of the best. Shout out to Visionary. I appreciate you, brother. I appreciate you. Thank you for being here. Tuning in like every day. Shout out to Sahil. Check out the beginner series, brother. I teach everything in the beginner series. Not everything, but a lot of the stuff that we look at, the MPO, everything you just mentioned is all taught for free in the beginner series. Go watch through all those videos, and you'll know how to pull all that stuff up on your chart. I named my baby goat Frankie. While we were live there, guys, I went on Amazon, and not Amazon. I went to the farm store, and I was trying to buy a pet goat. But I don't know. There's no real good ones here. I'm not going to lie. I got to wait for the better litter. Yeah, we might have a goat pop up on stream pretty soon here, guys. Might be similar to Mrs. Candles. Man, there's not a really good selection here for the goats. I'm not going to lie. They have cows. Way more cows than they have goats. Dang. Never mind. I just found one. Oh, my God. All right. Mafia, I woke up late, and I missed the move. Shout out to New Earth Guardian. Oh, no. Oh, no. Shout out to New Earth Guardian. Welcome in, brother. Welcome in. What about the 4-hour and the 8-hour money flow? 4-hour money flow. Still in the green, right? At the end of the day, this is green. It is technically trending out locally, but this is still in the green. We'll have to see if that green dot can continue us into a bigger wave. But Yeah, still in the green on the 4-hour. 8-hour, still in the green as well, coming out locally, but we'll have to see if that green dot confirms. I'm sorry, green dot prints. 12 and 16 hours still in the green. It's really this daily. I don't understand. 8 hours in the green, 10-hour in the green, 16 and 12-hour follow. Daily, just still in the red here. It's a conflicting signal, right? But again, I don't make all my decisions just off money flow. That's why we have the key levels, etc. It'd be really nice if we could just take out this low right now. Come on. Oh, we confirmed the red dot, new green dot printing. Yeah, we'll see what happens here. They're at the auctions. Shout out to Z Punisher. Should we vlog going to get a goat at an auction? Oh, man. I don't have a good place to keep a goat. Yeah, goats are cute and super small. Yeah, I want a little pygmy goat. It could literally stand on the desk. And they jump all over the place. You ever see Google YouTube goat parkour? They're awesome. Those are my spirit animal. Shout out to LRL, says Frankie, what's the tell a trader is ready to move with more money? I've built 20 to 200 once and doing it again to prove I'm ready. Is this okay? Shout out to LRL. Bro, I mean, you're doing it much better than a lot of people will. A lot of people will be like, I don't want to just make $200 out of $20. I want to make $2 million in a month. You're doing great, bro. I would say once you can do that, right? And the cool part about this is you could take that $200 and what I would recommend, right? I wish this was a thing when I started trading, which it wasn't. What you could do, right? You don't even necessarily have to take your own money and put it into account. You totally can. Obviously, it's there's trade-offs with doing each thing, whether you want to use a funded account or just invest more of your own money. It's totally up to you. But what you could do is maybe buy a funded account challenge, right? If you don't know what a funded account is, you could check the Warbucks video on the channel. You'll see it. It's a crypto prop firm. Allows you to trade with a bigger account size, but you basically you could either get an instant funded account, not take a challenge, and you could just buy the account and get instantly funded with whatever, $5, $10, $25, $50, $100,000. Obviously, the higher account sizes are more expensive. But yeah, I would slowly step it up, right? If you wanted to get a $5,000 account or a $10,000 account, start trading on a prop firm, right? That way, if you lose, you're not going to lose your own $5,000, right? If you blow up the account, you're just going to lose the fee that you paid for the challenge or the instant funded account. You could check it out. It's called Warbucks. You can go to Warbucks BTC. You could use code Mafia to save some money. But yeah, that would probably be, either just invest your own money or go try a funded account. Now, obviously, there are drawbacks. You have to follow rules, certain risk management rules, consistency rules. Make sure you read through the rules so you understand them. You don't just get the money and you can just gamble on them. You have to stay consistent. But yeah, it sounds like you're doing really well, bro. If you could turn $20 into $200, it's the same thing. You're just adding another zero. It's the same trades, same risk management. You're just adding another zero. There will be an extra psychological factor of, man, I'm used to being down $10 on a trade. Now I'm down $200 on a trade. So you will have that emotional kind of battle, but that's part of the game. So yeah, shout out to you, bro. Sounds like you're doing really well. Shout out to LRL. Let's see. Yo, shout out to Z Punisher said, get a baby goat, you have to hand feed. They follow you around. I had 2. Don't recommend them in the house. Shout out to Z Punisher. My sister told me the same thing. She's got horses, cows, and sheep. She has no goats, but she was like, I would not recommend you get a goat. I'm like, they're so cute. She was like, they will destroy your house. And I was like, dang. Appreciate that, Frankie. I'll check that out. Never heard of that before. Always open to advice. Yeah, shout out to you, brother. Sounds like you're doing great. Good work, bro. 70,600 incoming. Hopefully. It's what I'm looking at. I don't want to say hopefully, but yeah, we'll see. Got the red dot on the 30-minute. Again, we'll see if we can get down here, push into those next key levels, ending at about 70,060. Hopefully we can hold there, guys. Again, very simple. Just all the local analysis aside, I mean, shout out to anybody watching the live stream last night. Failed auction played out literally perfect. We're here. Got to hold this. Don't hold this. I'm essentially looking down here. I'm not saying it has to happen tomorrow or today. But eventually, right, get accepted into the range. Volume profile, magnetic theory of the volume profiles are very high probability we come to that value area low. And then once we get down there, if we're dealing with the high time frame, 2-day, red dot, the 3-day, red dot, potentially, might not look good down there. Again, I don't know what it's going to look like, but lose this. I'm looking to head deeper into the profile. If we hold it, let's just say we do come down and we get the bigger bounce, I would be looking between 73 and 74,000. If we can get above that, hopefully we can get back above 75K and get the bigger push up. But if we're looking for the higher low, in my opinion, I would really like it to come in here. If not, looking lower. So you get the local levels, you got the macro levels. We even talked about the high time frame levels below 60K. Shout out to New Earth Guardian, said, Frankie, do not recommend free version. I don't know exactly free version of what you are talking about. CME gap above. Let's check it. Let me just see something here. So again, that local zone with the single prints, 73 to 74K. Yeah, you do have the gap there. Let me check the ETH. Nothing. So yeah, I mean, it's kind of right in that zone. Pretty big, but you do have that gap there. Yeah, guys, I think that's what we're looking at. We'll see what happens. Of course, again, shout out to anybody on the live stream last night. Gotta love it. Never say it's a brag, but again, it could not have played out more beautiful for the failed auction down to the value area high. Down to the value area high zone. Literally exactly what we were looking for. Could have not played out as well, right? But nice to see it play out. Doesn't mean the gaps need to be filled. Yeah, more often than not, they do get filled. But yeah, it's not something that is like guaranteed to happen, right? One of the reasons we look down here, not only did we have our key levels, right? Whether I was looking at the CME gap or not, I would have been looking at this zone as the major zone of support. But we have the CME gap in there, which added to the confluence, right? We have the anchored VWAPs in here. We have the daily MPOCs, the weekly MPOCs, the value area high, the golden pocket. We have like so many levels down here. And then you start to look at where the CME gaps are. I usually use it as like confluence. It's like, oh, hey, we got like a nice level down here. And it's like, oh, and there's a CME gap there, which oftentimes act as magnets and oftentimes do get filled. More often than not, they do get filled, right? So I just use it as confluence. How do you pull the volume profiles when just starting a new range? Shout out to Tater. If you have not watched the volume profile videos in the beginner series, if you are watching this stream and you have not watched that beginner series, guys, free sauce. I think there's like 20 videos in there. I think. Go watch that. That is like free sauce on the channel that shows you exactly how I pull the ranges, how I trade the ranges, how I trade volume Fibonacci, how I pull them, anchored VWAPs, market cipher B, all the sauces in there. Go check it out. I would start off with leverage trading, the only leverage trading video you need to see. That is probably the most important video to watch. It kind of teaches you how to use leverage trading as not a gambling outlet, but how to responsibly do it and keep your losses small, keep your position size correct. So start there. I think it's the first video anyway. But watch that entire series, and you'll learn everything. But in general, you guys saw me pull it here, right? As we were coming down, right? What do? Again, I just pull it over. Again, watch that video for more details. But, we come down in here. Where were we there? 230. We were like hanging out right here, right? So what do? I see balance here, right? I just see local on the 1 minute, right? You can pull this on the 1 minute, 5 minute, weekly. Doesn't matter. It's all the same thing, right? Oh, I got a little consolidation here, right? There's a little value here. So what do? I grab the range. I pull it. What do I say? Well, hey, there's the value area. It's exactly what I just did live during the speech. And then I say, now I'm looking at price, right? And I'm saying, all right, well, I have this value area down here. I have the high. I have the POC. I have the low. Now I'm looking at the 1 minute money flow. This is why I drew that line, right? That price followed, right? It's not magic. It's just analysis. Price comes down. right? We have the 1 minute money flow trending to the downside. We start to cross over into the red, right? This is where I said 1 minute money flow crossing into the red. Then I say to myself, well, this 1 minute money flow crosses over into the red. What does that typically mean? Typically means you continue the downtrend in the context of the 1 minute time frame. Then I see the 15-minute red dot printing. What is that? That's a market cipher B 1/16 strategy. So why do I say to myself, hey, there's many reasons to look for this to rotate to the low, right? And you could scalp that if you want, right? I say to myself, I'm at the value area high, 1 minute money flows coming out. That is one reason why I look for a continuation down. Number two, lose the value area high. The POC and the value area low are the two highest probability areas for price to go next. Reason number two. Reason number three, there's a 15-minute red dot at the same time as this 1 minute money flow crossover. Market cipher B 1/16 strategy. Reason number three. What happens? You lose the value area high, you go to the POC, you go to the value area low. What happens next? Back into the range, back to the POC, back to the high, right? So there you go. It's like a 15-second, that's exactly how I did it. No holding back, right? So I just pulled that local range. Now, technically, you're back inside value, so you could technically extend that all the way to the right, right, and update that profile. If we had impulsed, right, I typically like to look at the previous profiles, and it's like we do this during live price action when we get some volatility, and you can just see how clean it is to understand where price is going to go, right? Yeah, I'm actually leave that there, right? It's like I don't want to overcomplicate it, right? There was no magic. I'm doing a calculation. It's got to be to this exact candle, right? If I had accidentally slipped and pulled it over here, like it's almost the same exact thing, right? You don't want to overthink it. I'm just marking out the fair value. Low, high, right? There's value here. You can pull these anywhere, right? Even right here, I could pull this, right? There's a little value. And then obviously right here's a little value, right? So you could pull this, you just pull it over, I pull it over the ranging profile, ranging price action. But again, watch that video to understand a little bit deeper on exactly, the thought process. But at the end of the day, like from like a, volume profile for dummies, I just did it live for you guys during the stream, during the FOMC stream, right? So it's like, oh, consolidation, range, mark it out. Hey, I'm at the high. 1 minute money flow is coming out. Maybe we can go rotate in full, right? And again, we had three reasons. We had the market cipher B 1/16. We had the money flow coming out on the 1 minute. We were losing the value area high, right? Many reasons to look for that full fill. And then again, even if I'm looking for a continuation down to these bigger key levels, what happens locally? You go below the value area low, you reclaim it. Next stop is the POC. Next stop after that is the value area high. Let's see. Free winning sauce, y'all. Yeah, shout out to CoinHoover. Go scrub back. Just scrub back till you see this price action and me pulling the profile on it. Watch it live and what we look for. I mentioned all that stuff. I recommend actually watching it live. What is the indicator called for money flow? That is market cipher B. There's the profile video. Thank you, Mr. D. Tony D. But yeah, let's see here. Frankie coin to the moon. Shout out to 257. Never a Frankie coin. If you guys see a Frankie Candles coin, it's not me. It's scammers. Do not buy it. I don't think there is. But as you guys know, I've said this since the beginning of my channel, or I guess when meme coins started really popping off. I mean, never say never, but I have zero plans on ever making a meme coin, guys. It's a lose-lose situation for me. Because in my opinion, even if you did everything correct, people are just going to think you're scamming anyway, and it's just never a good thing. Like, name a creator's meme coin that went really, really well. Maybe there is some, but most time they end in a nightmare, and I just won't do that. It's any discounts on market cipher B? Yeah, if you use if you use our link in the description, yeah, you will save. You'll get a discount. It's good, my guy. Shout out to 257. Welcome in, brother. Let's see. Shout out to Simon. Says your trading vids are the ones you first uploaded on YouTube. Scroll to the bottom. All your vids are effing loads. I don't know what that means, but shout out to Simon. Yeah, don't watch the old ones, guys. I mean, it's still valid information, but it is kind of cringy. It was like my first time ever on YouTube, so I was like super weird and awkward. I was like, oh my God, the world. Hello, world. I'm not a robot. But watch the beginner series. Jealous on that cat, Frankie? Oh, yeah, guys. We did the live unboxing during the Powell speech because that stuff just bores me. And but we got some Frankie Candles hats. Shout out to Tony D. Sent in a care package because all my hats were destroyed. So we got some freshies here. You can get them at FrankieCandlesTrading.com if you guys are interested. We got plenty of colors here. This is really just a personal package for me because all mine are destroyed, and I literally wear these every single day. Got the white, got the, kind of, I guess, like army green and black and white. You got the light gray and the black, or light gray and gray, and then I'm wearing like a charcoal. Pretty nice. My favorite is the white and black. Very clean. We also have other colors. We got pink for the girls or the guys. We got like the speckled white. We got a bunch of them. Check them out at FrankieCandlesTrading.com. Proven to increase your profitability by at least 700%. Yeah, there's plenty of money to be made off the coins that already exist. That is dang right, baby. That is dang right. Hat giveaway. I don't know how many likes we have. Should have done a like goal. We'll do a hat giveaway this week. I'll give away 3 Frankie Candles hats. We got to hit some like goals, though. We'll go for 550 likes. If we get 550 likes on the next stream, we'll give away 3 Frankie Candles hats. I need 2 to break even. Down 1,400%. You need to buy 2 of them to break even, 3 to be profitable. There we go. Gotta go. Stay safe, people. Frankie, talk to you later. Take care, bro. Keep up the good show. Shout out to 257. Thank you for tuning in, brother. Green one is my favorite. Yeah, I like this one as well. This is probably my favorite. I wear black and white most of the time. Sometimes all black. Most of the time all black. I don't wear a lot of I don't wear a ton of color. But I do have a couple things that are this color. It's like black, white, gray, and army green. Liked now, please. A hat to Austria. I need the profitability. Shout out to PV. Can you say something in Italian English? Like you want like a New York slang? Who knows what galamad is? That's Italian English. That's actually not even Italian. That's just like a New York slang word, I believe. Who knows what galamad is in the chat? I said that for the first time outside of New York, and everybody looked at me, including the waiter. And I was like, yeah, can we get the galamad? And they were like, the what? I was like, galamad. And they're like, what is that? And I was like, oh, sorry. I want to see if anybody knows what it is. Cool. Does anybody know what galamad is? Let me know. Spanglish. I'll send you a goat for a hat. That's a fair trade. I'll send you a few hats for a goat. There we go. Calamari, squid. There we go. Yeah, okay, so some people know. Funny, Tony knows. That's not even Tony D. Yeah, calamari. Absolutely. Yeah, apparently that's just a New York thing. I don't even think that's an Italian thing. Galamad is just like, I'm pretty sure gabagool. Gabagool is not even a word, I don't think. I think that's just an Italian thing. I'm Sicilian. They don't even call us real Italians. But I disagree. We're the Italians you don't want to mess with. Calamari is squid in Spain. Calamari is in Italian. Yeah, galamad, they just made it up. New York Italian is just like its own language. We're like the gangster Italians. New Jersey Italians all say it too. Yeah. New Jersey, New York. That's about it. I'm not even lying. I said it a few times. When I moved out of New York, there was a couple times where I was like, yeah, we'll take the galamad. In New York, they're like, oh, yeah, galamad, yeah. And anywhere else, they're like, the what? They also say mozzarella, calamari, coffee. It's coffee. It's coffee. Calamari is Italian. Yeah, I think calamari is the Italian word. It's also squid in Greek. Ragazzi. Oh, yeah, ricotta? It's ricotta. It's not ricotta. They say ricotta down here. I think it's so funny. I'm isolated though. I'm the only person that says ricotta. Like, yeah, give me some ricotta. And they're like, no, it's ricotta. It's ricotta. Come on. Now I'm hungry again. Me too. Calamari is completely normal. Yeah, I'll say now I just say calamari. But I guess that's what everybody says. The gabagoo. Get the gabagoo. I think that's totally made up as well. But yeah, guys, we'll see. I mean, you could take these hyper-local levels as well. But overall, right, like other than these super hyper-local levels, I'm going to continue to hold my positions. Maybe I'll just hide this. I redrew these, so I already have these on the chart. But overall, guys, we'll see what happens. You got your key level of support. If I could find it. I think I deleted it. But here you go. We are approaching and sitting inside the key support from yesterday, right? Absolutely banger move down there. Beautiful call down to the value area high. If we lose this, yikes. Really, over time, I'm looking to come here. POC honorable mention at 68K. If we get the bounce, biggest level I'll be looking at above is going to be the golden pocket 786. 73,560 to 73K. And, once we reclaim 75K, that's what opens up the door to $78 to $80,000. But other than that, we'll see what happens. We got some mixed signals here on Market Cipher B, but I would say for the most part, you got a lot of the money flow coming up on the higher time frames. That's what keeps me open to the higher lows and higher highs. But as always, if that does not play out, there's no guarantee that happens. Lose this. Very important level of support. Pray that this holds. And then underneath that, if you don't want 60K to come, must hold this. I don't really know how confident I am at this point. Down here, when we got the rejection here and shorted this, I was pretty confident in the support down here. Right? It was a clean higher low on your Fibonacci retracement, that full rotation of the volume profile. Very, very nice support. And even if we had come down a little bit more locally, if we had did something like this, I still would have been interested. But at this point, I don't know. We get down here, the way the high time frame red dots are looking to potentially print, we get the bigger move down. I don't really know how confident I am in this holding. All right, once we get down there, of course, I'll be with you guys. I'll cover the price action to see kind of what we're getting down there. But I prefer to not lose this zone here. Frank, Italian from New York, living in Cali. I said, Manicotti. For the first time here, and I was looked at funny. Yeah, we say Manicotti. I don't know. Yeah, what do they say? Manicotti? What do you say? You say it like Manicotti? That's what we say. Liquidation levels. Yeah, we could take a look at the liquidation levels. We'll take a look at the Manicotti real quick. A little bit of the Bergotta, you know what I'm saying? Little gabagool. Little Denozo. Shout out to CK, said if the money flow on the lower time frame is in the green, but you're getting a 15-minute red dot, what do you do? Wait. Shout out to CK. It comes down to, for example, let's say, in this case, right, locally, right, I'll just use this as the example because this just happened, right? Let's say, what do you say, money flow? Yeah, like the red and green dots indicate the ebbs and flows. Ebbs and flows. Green dot, red dot, green dot, red dot. Money flow coming into the green indicates the trend, right? So if I'm ever in a situation where I have, this is your zero line, money flow is in the red, it crosses into the green, right? So you start to get a little bit of an uptrend. Let's say I'm looking at price right here. Money flow is in the green. I expect it to continue. And then there's a 15-minute red dot. I would look at that 15-minute. Again, it depends on what time frames you're looking at. But if I see a 15-minute red dot, let's say the 1-minute money flow is in the green, and I see a 15-minute red dot, or let's say your lower time frame money flow is green, I see a 15-minute red dot, I would expect that 15-minute to give you an ebb or flow to the downside, right? So I would kind of sit out and wait for the pullback. But if that money flow is making me anticipate a higher low and higher high, I would sit out on that red dot waiting for the pullback for a higher low, and then I would wait for this move to then look for a long. Typically, I'm looking at a golden pocket retracement, golden pocket 786 retracement. Right, so I would wait to get the pullback. I'm looking for the bounce here. And then at that point, right, maybe the 15-minute red dot brings you down. Now you're printing a 15-minute green dot with your low time frame money flow crossing into the green, or still in the green. Then I'm looking for the continuation of the uptrend. Red and green dots indicate, right, you could just look at it. Whoops. Let's take a look at the, let me get like a nice clean money flow crossover here. Right, let's just say 3-minute money flow crossing red. This makes me think the trend is going to continue down. But let's look at the red and green dots. You have the red dot, drop down. Now I'm getting a green dot. You get to move up, right? Red dot, green dot. Red dot, green dot. Red dot, green dot. Right? So ebb, flow, ebb, flow, ebb, flow, ebb, flow. Trend, money flow is coming out. Trend continues down. That's how you want to think about it. It is going to be dependent on the time frames, etc. But yeah, like even if you're just looking at the 15-minute time frame, for example, let's say, or actually, let's look at a let's say here, right? 1 hour money flow crosses green, just for example. I am not going to long, even though the money flow is crossed green. I am not going to long up here, right? Why? Because the money flow crossover indicates the trend will continue. Low, high, higher low, higher high, higher low, higher high. The key is to try to long the higher low, not long right before the correction. So what do I see here? I see money flow crosses green. Let's say I sit on the chart right here. Price is live right here. Okay, money flow is crossing green, right? Or let's say I get in a little later. I see the money flow's already in the green. We're already pushing up. I'm not going to long this, right? But what I am going to say is I'm interested in a long. I'm just not interested in the long here, right? Money flow is going to continue into the green. What do I expect? I expect continuation of the uptrend. So what I want to do is, for example, I have the red dot printing on the 1 hour, right? Let's say you're even looking at price here. Oh, my God, we're pumping. We're pumping. Money flows in the green. We're going to continue the trend. But the trends have ebbs and flows. So what I want to do is be patient, wait for the next red dot, and then once that red dot pulls back, that's where you're going to get the retracement, more often than not. And then that is where I say, hey, where are my key levels? I would like to see a higher low. Pull from the low to the high. There's your golden pocket 786, right? So if I pull this into bar replay mode, okay, cool. Money flows in the green. I've already missed a big move up. I'm not FOMOing long, right? This is why people get confused, right? Like my bias would be long here, right? But when I say my bias is long, it doesn't mean enter a trade, right? So my bias is long. So I sit on the chart and I say, okay, money flow is green. I'm expecting the trend to continue up. I'm expecting something like this, right? I don't want to long here. I want to sit out, right? So even if it continues up, I'm not going to chase it, right? Even if it continues to push up, that's okay, right? I'm going to say, hey, what can I do here? I could wait for the next red dot for a pullback because if this money flow stays green, trend is likely to continue to the upside, right? So I'm patient. All right, now the VWAP is starting to curve down. Now there's a red dot about to print. Oh, it's printing. So I'm going to sit on my hands. Where is the key level that I will be looking at for a higher low? Pull from the low, previous swing low, to the high. That 1 hour red dot is probably going to pull us back. Now remember, my bias here is still long. I'm not getting scared. Oh my God, I'm not long in this anymore. It's dumping. No, I'm expecting this pullback based off the red dot. Ebb, flow, trend, continuing up. Wait for it to push into the key level. I know the golden pocket 786 is typically where I want to see those higher lows. You also have the value area high. We actually looked at this level live. I think it was on Friday. Yeah, on Friday. That's a key level to hold. Now, this is where I would be interested in potentially taking a long position, right? And you have a nice invalidation below the 786. If I lose that 786, higher lows invalidated, and I'm getting accepted into the larger profile, I'm probably going to continue down. Right? But if it holds, I can look at that as a higher low and a higher high. Money flow is still in the green. Now, I'm about to print a 1 hour green dot. Why would I long the red dot? Right? I want to wait patiently for the pullback, and now I have a green dot printing, just as I explained in the fake example. Now I can say, I'm interested in a long here, invalidation below the 786. Hopefully this is going to be a higher high, right? And sometimes it won't be. Sometimes it gets stopped out, but whoops. Boom, right? And then the target there initially would just be a higher high, right? Looking to break this high. And then you just executed a perfect trading plan. You saw the pump. You identified the trend was going to continue up because 1 hour money flow was coming up. You didn't FOMO long. You were patiently waiting for that red dot to bring you down. You push into the golden pocket 786. You took the position, clear invalidation. You targeted a new high. Boom. There you go. Free sauce. Hopefully that answers your question. Gabagool used to be $1.99 a pound in Chicago. It's now $23 a pound in Seattle. Crazy. It's just ham. It's gabagool. It's not just ham. I'm just kidding. Thanks for the gifted sub. Shout out to Chris. Yeah, shout out to BTC Bill for gifting those subs. It was in the middle of the live stream, so I wasn't able to play the jackpot. But shout out to BTC Bill. Always supporting. Are you going to leave the stream before the zone? Yeah, I'm going to wrap it up here. But yeah, we could be waiting. Who knows? We could be waiting a while. Oh, man. It's going. It's going quick. Man, I wish I could scrub back to the stream. Or scrub back to the beginning of the stream. But yeah, we'll see. Maybe we can get push into this level, guys. It's approaching the key support. I'm just glad Frankie kept the stream short today. Shout out to Panda. Always, bro. We always do short streams. But yeah, that's what I'm looking at, guys. If you just tuned in, you could... Hats are falling all over the place. You guys can scrub back to the beginning of the stream or scrub back 5 minutes from now. But yeah, you guys know what I'm looking at. You know the key levels locally. You know the key levels on the higher time frames. And my overall plan, I'm going to continue to hold the longs. I'm going to continue to hold the shorts. And yeah, we'll see if... We'll see what happens medium term. Again, I do prefer pick or drop down. Have my shorts continue to pay out, more time to enter. But yeah, it's really hard, guys. I'm a trader, right? So it's like, are you bullish or bearish, right? I'm a trader, right? So like, sometimes I'll take a short and still be bullish, right? Like here, I took the short, I was still bullish. Bullish for new all-time highs? No, right? This is why you have to have a deep understanding of, like, the market, right? It's like every time I say I'm bullish or bearish, it doesn't always mean all-time highs or new lows, bear market lows, right? I'm bullish here in the context of the continuation of an uptrend, looking for a higher high, right? Which obviously ends up being the case. So when someone says, are you bullish or bearish? This is a very difficult question for me to answer without more context, right? If someone says, are you bullish or bearish over the next day or the next week or the next month or the next year or the next 10 years or the next 30 seconds, right? I am technically bullish long-term. Back here, I was bullish long-term. Long-term meaning on the higher hourly time frames for a new high, right? Does that mean that I'm expecting new all-time highs? No. I'm just expecting a new local high. And then people say, are you bullish or bearish here? And it's like, I'm bullish as this will probably continue up. But I'm bearish, I guess you could say, short-term, because I shorted this, right? So from a trading perspective, right, it's like, are you bullish or bearish? It's very difficult to answer that question without, like, a ton of context. Because it's like bearish because I'm shorting, but also the overall plan there was to short this just to make a few grand to then long it back up. But yeah, I'm just in a really cushy position. If we wind up nuking down to the value area low, my shorts from $98,000 and $90,000 will just continue to pay me. And then hopefully, if that does end up happening, we can find those high time frame bull dips, right? Because high time frame, it's like, are we going to have to go down for that one more, for that big drop? I do prefer that because it would be very, very clean, right? And just horizontally, it's very clear. Hold this, could continue the uptrend. Lose this, I'm looking down here. I don't really have super high hopes that that will hold. Unless we see a... Oh, there we go. Oh, we're still barely front-running, and my alert was a little higher. But if we end up losing this support, that's really all we have underneath us. Once we lose this, I'm looking down here, right? And again, the reason I prefer that is because it would eventually give us some nice high time frame bullish divergences, right? We do something like this, right? Bear flag out, drop, bear flag out, drop, massive support, bullish divergences, right? That would be, I'd be interested in bouncing here, right? So we'll see what happens. Only time will tell. But yeah, we're getting very close here, guys. I don't know. I can't like gamble. I could be live for another 30 seconds and hit this. I could be live for another day to hit this. But you guys have those key levels. Scrub back if you missed them. And yeah, I think that's all the time we got for today's live stream. Thank you guys for tuning in. Smash that like button on the way out for our boy Frankie Candles and Jerome Powell. Entering the stage epically, as he always does, like little Yachty. But shout out to Digital Pencil in the chat, said I came for the TA, I stayed for the vibes. Shout out to Digital Pencil. I appreciate you for being here. Hope you're doing well. Shout out to Digital Pencil. Shout out to Prash. Shout out to Brillo, ZP, Darren Does Things, Jesse, Tony D, Mr. Market, Jenny. Hey, shout out to Jenny. Welcome in. CK. And last but not least, Original Dukes. Thank you guys for being here. I'll see you tomorrow. Watch those key levels. That's all I got. Hasta pasta. Frankie Candles out. Bing bong.
Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor, ayy, on a roll, here we go. Yeah, we winning by a landslide. Never see me coming, I'm a landmine. Yeah, I ain't taking orders in command like, yeah, you about to see me on demand like, you know on demand. If you ain't know, you about to understand. Yeah, I got the team by my side, right hand. Yeah, take it to a string, you ain't seen it like that. Yeah, and it's the dream, and we coming for the bag. Yeah, and we ain't never going back now. Future expedited, now we on the fast track now. They won't lend a hand, now they see us on the map now. It's time to act out. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the road, here we go. Yeah, at the top of the class on a roll. Hey, and it's time to run it up, yeah, you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the road, here we go. Here we go, at the top of the class on a roll, and it's time to run it up, yeah you know. Maxed out, put the pedal to the floor. Hey, on the roll, here we go. Yeah, at the top of the class on a roll. Hey, and it's time to run it up, yeah you know. Yeah, maxed out, put the pedal to the floor. Yeah, on the roll, here we go. Here we go. On a roll, here we go.
Haven't done a fake out in a while, but here we are. Real quick. Somebody was asking for the liquidations. I never brought them up. So real quick, I will just show these. Got a little bit of local liquidity sitting down here into that key level. Isn't that funny? The second I get off the live stream, the level taps. It's like we're watching it. I end the live stream. Boop. We tap it. But we got some liquidity down there. Not shocking to come down and take that out. But yeah, guys, we're inside the key level here. So we'll see if that holds. Hopefully we can print some of these bullish divergences. I would say money flow on the medium time frames, or I should say like the lower time frames, like the 80 and 90 minute. I mean, it's definitely support. Whether that's sustainably going to bring us into a high. Medium time frames are a little bit chopped on that, but this is the support, guys. Hopefully we can get those bullish divergences. Got the 30 minute, literally exactly what we drew. Maybe we should just start waiting for Bitcoin to follow the magical line. But yeah, we'll see if that ends up confirming. Got to see what happens here. 45-minute red dot printing. Yeah, 80-minute red dot. So we'll see. We might hang out in here, but I'm going to gauge the reaction and see if we can confirm some of those confirmations. If we lose it, obviously going to be a bit more bearish. But that's all I got for you guys today. I will see you tomorrow. That's all I got. Hasta pasta. Frankie Candles out. Bing bong!